morning. Good morning.
What is going on? Oh, man, what a morning.
It's like I feel like our spaces from last week is still going.
Right.
It feels like the ball, I should say the snowball that like started to go down the mountain and turned into an avalanche by Friday.
Yeah, it's crazy what a little due diligence can do.
Yeah, let me get all these news channels a little bit lower in volume. Oh my, lots to discuss. So a couple things. Nvidia obviously chopped up to 600. What a week that was for that guy. Um, it came out. Jeffries came out with a. Actually, it was Cantor Fitzgerald on that one. Came out with a note on Nvidia and AMD
Oh,
raising the price
same,
target
same.
on Nvidia to $775 per share, and on AMD to 190. What's interesting is though they're not like crazy reacting. I think there's some gains a little bit to digest there. SMCI obviously went nuts. They have earnings next week, and if they have a good report, it could hold these gains or even go up higher because just the market cap, the growth trajectory, and its valuation at the end of the day. Nvidia is still a cheap stock. I know that's hard for a lot of people to swallow, but it is. And at $600, I tried to um, do the forecast in that snowboarding video I did over the weekend, talking about how re-ratings work. Was trying to kind of explain to the audience and our community how re-ratings work. And just real quickly, what's a re-rating? A re-rating is when there's an inflection point in a stock and it's become so obvious to the financial community that it's almost like an IPO. It just like starts over at that price because just like everyone has the math and like the shares are racing to get to that price. Yeah, there's still profit taking and stuff like that, but you see how fast it got to 600, and that's because most of Wall Street growth portfolio managers had the following math, which was about $20 of earnings per share, which looks like it's going to be more like 22 to 20, $24, but no one's really disputing the $20 guide up from Jensen Wang. Again, people think that's going to be higher. And then I think on the last spaces or the spaces before that, we kind of talked about the unwritten rule in multiples and growth when it comes to the markets and stocks. And basically it goes like this, just the short version again. Um, Again, it's barring if you're like your growth is accelerating or decelerating, but let's just say kind of like par for the course. If you're growing 20%, you have a 20 multiple. You're growing 30%, you have a 30, 40. That shifts. That's not exact, but again, it's like a science mixed with art. But Nvidia to grow 40, 50% for the foreseeable several quarters usually should be about a 40 multiple. And what we did kind of in the model was attribute a 30 multiple to that $20 of EPS, and you get $600. That's why the stock kind of like got there real quick. Now you're going to start to see the $700 and $800 price targets as like really it's 22 or 24 times what should be at least the 35 multiple. And that starts to put you in the 700s and stuff like that. So you can kind of do the math. It's interesting with some stocks like that, the fundamental math is a better roadmap than the charts. The charts just find a way to get there. And then sometimes a stock's kind of like in between and then it just has good technicals because people just like to trade it and that's enough to juice it over. So there's just so many different factors that could take a stock higher, but that's a couple things there. So just a quick rundown. Um, let's go through some of the letters. Apple. Um, Now all of the long knives, as we were saying in the last couple spaces, that were in for Apple, and I think we did a pretty good job saying that that's usually when it starts to pique our interest. And Exclusive and I are just we're very like-minded. We're very similar traders, and then the beauty too is where maybe each of us have a weakness, the other one fills in for the most part. So that's good too. So I think we did a good job talking about kind of like the contrarian thing when a lot of people start going after Apple downgrade after downgrade, just to give you the mind of a portfolio manager, because maybe I was one for just a brief second, but the idea is that as each downgrade comes in, it's actually de-risking for you to go in, because portfolio managers, they're worried when there's all these buys, right? Because then they can go in and then their a sell or a downgrade comes in and then it affects their position, versus a lot of downgrades being in there already, then those can switch to upgrades, or it's just more de-risked. So it's a little bit contrarian, but that's just how they think they're. So, long knives are coming out for Apple at 185. Now it's 194. And you have things like Oppenheimer maintained Apple coverage with Outperform and Target, $200. So they're taking long knives out. There was another one, Bank of America put Apple back on the U.S. first list, meaning they like it. So that's that. Then Adobe, it, it it had this downgrade from Barclays. I didn't like it last week. I kind of talked about it. I was like, if it brushes it off and closes in the green or starts to, go past it, I think that'll actually be bullish, because similar thing there, de-risking it and kind of makes it more attractive. Um, so there's news on it this morning, which is Nuvei, which is a big financial firm. You can Google it, Nuvei, Nuvei. But they entered a global partnership with Adobe, um, for e-commerce payments, and a lot of people don't know Adobe's heavily involved in e-commerce analytics. That's why it's like, around holiday seasons, you get the numbers from Adobe on how Amazon and Shopify, how online sales are doing and stuff like that. So they're heavily involved in that space. A lot of people don't know that. And they announced this partnership. It's basically customers to access uh, payment technology through existing integration with Adobe Commerce, as I was saying. So allows them to use the APIs, which is great for developers and stuff like that. So it actually popped up a buck on that news. I was watching it, then the news came out. It wasn't just up to $2 in the pre-market. That actually added to it. So moving along, Affirm's up a little bit pre-market. It caught, I believe an upgrade, it was yesterday, so it's getting a little bit of that left over. AMD we already went over, but still again a little bit weak, even on that upgrade to 190 from Cantor Fitzgerald. Kind of just tells me it needs to digest, and and Nvidia isn't up like $5-6 off the news. So listen, they still have a lot of momentum. They're tricky. But they probably need to digest some games, but we'll watch and see if there's any additional momentum there. I do want to talk about the China stocks in a second, because I don't want to bury the lead. There's a lot going on there. But
So
Amazon,
much.
nothing specific. Amazon's just on breakout watch. Keep an eye on 157.15 ish, around that. That's the 52-week high. So it starts getting above that. I think it's got to contend with. There's weekly supply that's pretty big between the 160 165 area, but that's where a lot of things fell apart from Amazon. So if it gets over 157, I think it actually could push to 159, 160 and start testing those levels, see how much supply comes out of there. Um, Moving along, ANET, Arista Networks. Can you hear me now? So for people that know in the community what I mean by that, just look at my post. Look at the snowboarding video over the weekend. It's really important, not because I wasn't snowboarding. Actually, it was in the gondola ride. It took a couple minutes to go over the forecast and a lot of things there. And I discussed Arista and a lot of stocks like it. The stock is basically up every single day from my eyes. Um, AVGO, still doing well from recent momentum. Above 1200 is still a kind of an expansion out breakout. Boeing up a buck. Interesting. Scott Kirby was on from United Airlines this morning on CNBC talking about their earnings report. My boy Exclusive's really good with airline stocks and those type of like off the cuff earnings reports and stuff like that. So I'm pass the mic. He might have something to say there in a second. And then we have an announcement to make in a couple of minutes as well, which is really cool. Um, but yeah, Boeing's up on that pin action from United Airlines, saying they talked all this shit about basically the management team needs to get their crap together, and I totally agree with that. It's just right. It's not even stock market people. The whole world is just already had enough of Boeing's manufacturing issues, even though it may be kind of Spirit Aerosystems. But a quick tidbit out there: a lot of people don't know this. Spirit Aerosystems was spun off of Boeing. It's the same fucking management and culture. So there's a lot there that needs to be addressed.
It's like those
But
subprime companies for phones. It's the same kind of like it's Verizon, but it's just a cheaper plan.
exactly, yeah, exactly. So, but it's still up because he did mention that Boeing is their biggest partner. They need Boeing to be successful in order for them to be successful. So it's still kind of positive because they're basically saying they're still going to buy planes for them. So Boeing went up on that a little bit. Um, okay, next on the B's, Baba, right there, perfect. So we don't bury the lead. It's up almost $5. Couple things going on there. So overnight, China announced approximately about a 200. It's a rough number. It's not exact even coming out of the media from there, but about a 278. Let's call it 300 billion to round it off. Stimulus mulling. The announcement was like this: China mulling over. So not mulling, thinking about. That's the word mulling. Um, a 278, like I said, let's call it 300 billion stimulus plan specifically to stabilize the stock market, not to stabilize the economy. And everyone knows that usually helps the stock market, so people start front running it, like literally to inject into the stock market. So I don't know what this means. They're going to buy a bunch of Tencent and Alibaba and KWeb, or just spread it through the brokerage houses, whatever. But when a company, excuse me, when a country's been under this much pressure, I mean, it's dealing with literally COVID lows. It's been in a pretty horrendous bear market. It's going back years and years of lows here. Um, it's I think it's actually it's a low it's contending with even like prior to that another bear market maybe like 10, 15 years ago. I'd have to pull out my charts, but it's down there. That's the point of the story. So what happens, kind of like anything else, is positioning. And definitely I can tell you the following: American institutional portfolio managers, they're just out of it. It's been a terrible performer, and there's so many like big investment houses that are saying that China's uninvestable for various reasons, for the most part politically, we all know. So there's very few people holding those shares. That's a little bit tricky because people with big money, big portfolio managers, they're not rushing in even off this news, to be quite honest. I want to tell you the thinking. But there's enough out there of shorts that may have overstayed their welcome, just enough negative sentiment that there's enough of this, like, maybe let's call it a bigger dead cat bounce until China proves more stimulus, and you start hearing more institutions saying, okay, we're going to take a bigger shot at this and put some of our investors into that stuff. That isn't happening yet today, but a lot of people might start thinking that and front running that, which is why you're getting the pump and you're getting Alibaba up $5 as well. Another part, as I said, there's a few tidbits. The other tidbit is New York Times has been reporting. Um, it's been kind of reported over the weekend and a little bit yesterday, but it seems to be making more of its rounds today on top of the China stimulus that former CEO and founder Jack Ma of Alibaba has been buying a ton of shares. And I want to explain something to all you guys, and I think you should write this down because it's important. When it comes to insider buying and insider selling, this is the note to make. And this is kind of just like the professional way to think about it in your head, and this will help your trading down the road. You'll see things like, and this is a recent example. Hedge Eye, Keith McCullough. Sorry to call him out, but I'm not a big fan, and I think they don't do a lot of good service to a lot of their community. But that's for other people to decide. Um, he recently put out a post talking about the insider sales of Facebook and Meta of Mark Zuckerberg, who sold approximately $400-500 million worth of stock over like a short period of time. And he labeled it as, oh my gosh, the last time Zuckerberg sold so much stock, the stock went from 300-400 bucks down to $100. You know, he's like, maybe he knows something most of us don't, and started to plant that seed. It's fucking hogwash. Okay, the stock went down from 300-400 bucks because of a bunch of shit going fucked up with their earnings. They were overspending money like drunken sailors, and then their earnings were bad, and then the government was going after them. It was a perfect storm of multiple things that had nothing, literally zero, to do with his insider sales. And then to repeat that comment was just as stupid. I'm sorry to come down on and name a person. It's not really my style, but this is a big professional and should know better. So I bring that up as an example because since his post that the stock was around 340, we all know how it's done since. So that insider sale didn't affect anything. And here's the note to make. That wasn't all the note to write down. Sorry, sorry for that. But this is the note to make. When especially someone that owns $60 billion of stock sells $500 million, it could be for tax purposes. It could be because they bought a house. It could just be plan trimming. And this is the note to make. When an insider makes a sale, it can be for multiple reasons, planned reasons, multiple reasons. The other side of the equation is just one line. When they buy, it's only for one reason because they think the stock's going up. They sell, it doesn't mean that they think the stock is going down. Again, it's multiple reasons. It could be planned accounting practices that they're like plan to sell so much. They have like a tax burden they got to raise money for these, and then the guy still has 60. It's like couch change for him. He still has 60-70 billion dollars, and he sold $400 or $500 million. It's like less than a percent of his holdings. So anyways, so that's the note to make on that stuff. So Jack Ma buying Alibaba is obviously if we go to my equation, there's only one reason for that, because he thinks it's undervalued and he thinks the stock is going to go up. So I actually might be thinking of a day trade or a scope trade there to $75, kind of round number seems possible. Even though it's up a lot, I can see it coming back a buck and then kind of going back up or something like that. Maybe like we pick it up around 72 and see if we can get it to 75. That's a trading idea that I'm thinking about out there. And then exclusives really good. A lot of those names too. Obviously PDD and Neo and all those things are catching a bid, and KWeb and stuff like that. So we can think about that. And shout out to my boy Michael Shea. He really nailed, from what I understand, a KWeb call overnight. I saw a little bit of action. We weren't obviously on Spaces. Our community, I didn't post much about it. I grabbed 100 shares and a call or two of Alibaba. I'll post that. But like I said, we'll revisit. There might be an interesting trade there. Moving along. CrowdStrike goes up every day, right? Doesn't Not allowed to go down. But again, that's just we talked about that over the last couple of weeks in cybersecurity and the re-ratings that are going on there. Stocks that are still below their all-time highs. CrowdStrike was around $300. Here we are. That caught up pretty quick. I think the market's going to look for other things like that. I'm not chasing Crowd here and Palo Alto. I'm kind of letting them digest. Like I've sold most of my options out of there in this run up and then put that into shares of said names. So I'm just kind of letting that simmer there. Moving along. Datadog, for a lot of people know, I'm kind of like riding that to 140. I think that's a strong name. I think that's starting to follow kind of like Arista Networks playbook, and a lot of those kind of software names around AI are starting to do well. Disney exclusive really nailed the short term on that one. I think he's probably I don't know. Those calls are probably 300-400%, if not more, at this point. I think I did a pretty good job on Disney for this month. When you think about it, the stock's been freaking dead money, right? For months and months and months, and it hasn't been on any of the banana monthly lists up until this month. Just because I saw a little bit of the momentum in the charts, I posted the chart. Jakey recently posted a chart similar. We went back and forth on it there, so you could see Jake's chart and my chart. But bottom line, we had talked about it a couple spaces ago. Exclusive and I were going back and forth. We talked about the activist investors in there. And usually when you start getting activists in there, they start to kind of bump elbows, create proxies, try to get board seats. It gets people the idea that there's going to be some change. And if somebody can get in there, even in a company that's been just sitting there dead money, they're like, what could they possibly do? You can actually these companies can always do a lot to get the stock up. It's just whether they want to or not, depending on their like long-term views and stuff like that. But if Disney just started selling off or spinning off sectors of their company, the stock's going to go up 10, 15, $20, especially there's been so many shorts and so much negative positioning there. Everyone's going to like turn around. Just like it could be FOMO real quick there. So that's just kind of like the developing smells of it. And I'm glad Exclusive nailed the short term on it. I kind of wrote a couple calls with him there, and then I was able to get a couple shares and a couple calls for my monthly target, which was it went from 88 to 95, which is over a 10% move, almost in a stock that doesn't move 10% in options. It's a boatload. Why? And this is a good thing to make note of for newer traders or just medium traders. The stock doesn't move. Its implied volatility is nada. It's nothing. And if you know your Greeks, that means the options are super cheap. And if you can find stocks with implied volatility that's super low, they're kind of like dead money because the options basically Greeks are math that you need to know, but like you need to understand the psychology behind the Greek. Okay, the Greek is basically telling you its psychology is like, hey buddy, we fucking never move. Why am I gonna inject a lot of premium and then fucking get burned for it in this fucking thing when it barely moves? Like, prove it to me, then I'll like boost up my premium a little bit. So that's the opportunity, okay? Because when a stock is just sitting there, its options are super low. So when you can figure out when it's gonna finally move, that's the opportunity to get a cheap option to go more. And Exclusive's really good at doing that. And he struck once again on Disney. So that's Disney. Moving along real quick here, Enphase Energy, that's up a bunch on a note out of Truist. Truist decided to move their from a hold to buy, which is like a considered
Excuse
a
me.
double upgrade because it's not just the buy, it's getting off of a position and then into a new position. It's a longer story, but you get the idea. And then they went from an $85 target. You're gonna like this one, from 85 to 145. That's a big jump. They cited increased demand. So Enphase is up $5. That's not a lot for that stock. This stock is very high beta, and it may have a lot of shorts that may have overstayed some welcome there. So I'm going to be looking. It's tricky because I hate when something's up $5 and stuff like that, but that's the way it is with this. I might scope out a trade there too. That's something on my mind as well. It's on the banana list too. So that was a tricky one. It went from 100 to 135 this month, back to round tripped it. Now it's at 112. My target was 141. Like I should have said 135, but that's where the charts pointed. I'm just being honest with myself and the community. I fell a little bit short there, but it's a lot to ask for till the end of the month. But maybe you can get back to 120. I'll scratch it off as a miss or close call on the monthly list, but maybe it's still a good trade. Okay. Moving along, IWM. That's another thing I don't want to bury the lead on because it's important. Look, interest rates are still up. The 10 years up this morning. I'll circle back to that in a dead period. But interest rates are still up and IWM is up. That's telling me that the market is an important thing for you guys to always understand. This is very, very important. And always remember this in multiple sectors. There'll be kind of an underlying thing that drives the sector. And then what the actual stocks do to the underlying thing, you'll understand what I mean in just a second, really can tell you when there's a bottom or kind of a top in it. For example, in the oil market, the oil barrel and oil stocks are two different things. They tend to follow, but they're two different things in a big way, right? ExxonMobil still makes money, can increase its company, while a barrel of oil 15 years ago was still $90 and it's still under that. So and those companies have obviously grown, so they're not one of the same, but they try to track. So if you start to see a barrel of oil going up, but the stock's starting to be flat or coming down, that might forecast that oil's topping out and the barrel is actually going to start to come down. So you can kind of gauge things through their different feel in the underlying. And why I brought that up to IWM is because interest rates are kind of like the oil barrel for small cap stocks, okay? And interest rates are up and IWM is up. That's starting to tell me that maybe the stock market, which is the ultimate thinker, the better thinker than all of us, the group thinker, it, it's telling us that maybe, just maybe, it's starting to realize that interest rates are once again topping out after their most recent bounce, and they're going to start to cool off again. And look at how this timing might just be playing out. Again, not financial advice, just kind of thinking in putting all of the pieces of the puzzle together. What do we have this week? keep track of all these balls in the air I'm talking about, right? So today, good news, we have zero economic data. That's usually rare in a week that has a lot of economic data. Tomorrow we have PMI. I'm just going off memory. And then I think the day after GDP, but the big one's going to be PCE this Friday. But there's literally no Fed speakers, nothing in our way today. So it's going to be more focused on kind of like what's happening in the market and earnings reports and stuff like that. But again, anyways, you get the point there. So I think IWM is starting to sniff out that the PCE report is going to be okay or continue to show that inflation's coming down, especially if you look at 3 month and 6 month annualized core, it's actually near or at the Fed's target. So I think that's going to start to make the bond market say, yeah, you know what? They're going to cut rates because it's going to give the Fed enough air cover to cut rates because inflation's coming down. And if you look at what's called the real interest rate, and this is a little, I don't want to go too deep in the macro because I'm kind of a pretty serious economist in my other life, we'll call it. But the real 10-year interest rate, and Bill Gross was just talking the same thing. So it's not that he copied. I just like it when the right decision makers of the bond market, which are called the bond vigilantes, which Bill Gross from PIMCO is one of the decision makers of that world, it says the same thing. It tells me that I'm maybe on the right track, and formulaically, the PPI report, which showed a beat on inflation where CPI was a little bit hot, PPI flows through. If you know, for my economists out there, they know what I'm talking about. It flows through to the PCE report. So if the PPI report is good, for layman's terms, it basically says that maybe the PCE report is going to be good too, and that we have on Friday. So if that is good, then these interest rates can start to cool off because what happened? The 10-year was like a 5%. It cooled off. It went all the way back down to about the low was like 378, 375. And then it bounced off of that kind of like a stock and then went back up above 4. And that's been a little bit of pressure for the markets. And now it's sitting, like around 4 1 ish. And that's like a big move. So I think it's going to start to cool off. And the PCE report might say that, and it's like the small caps are kind of starting to say that too. There's like a little bit of a messaging around there. I wanted to like share all that with you guys, the thinking around that. So not just shouting out. That's what we do here, just kind of that overview. Mara, that's a little bit down from looks like Bitcoin's just been under pressure a little bit ever since the ETF sell the news kind of feel there. Meta, just up kind of a little bit here pre-market. Netflix, don't want to bury the lead there. It's got earnings later. If you look at my profile, I did an earnings report right up and a target price. I'm looking for 535. That doesn't mean it's going to happen right after earnings. Just kind of like that's where the chart's telling me in the intermediate term it's going to go with this catalyst. Kind of makes sense. It might pop up there. But one of the things spiking it up this morning is there happens to be news on it and TKO, which is the publicly traded company for WWE, Worldwide Wrestling, for all the little boys out there. I was a big WWE fan growing up. I don't know about UX, but I was.
I'm more
I
of a
remember,
UFC person.
the Hulk Hogan's and all the war, all the characters. Let's put it that way. So, uh, TKO is up, I think, like over 30% on a partnership deal with Netflix. I believe it's over 10 years. Somebody can correct me. $5 billion. It's a big number. It's obviously huge for TKO, but it's obviously good for Netflix too because it looks like a lot of people will want to. It'll pick up subscribers. It's a quick way for Netflix to pick up subscribers, but it's a quick way for Netflix to get a little bit into the sports world through an interesting niche that has a huge cult following, right? The subscribers and following of WWE, they don't fray. They don't turn away from their sport. They're long and strong. So that's interesting there on the day that they're reporting news. That's going to help their subscription. That's not in the earnings report that's coming out today. That's already going to be an additional bump on subscribers from whatever the report's going to be today. So Netflix got a little bit of wind behind its sails. And there's another important point to talk about there. And I want to pass the mic to Exclusive, and the market's going to open. But sorry, I took so much time up on the run up. There's just so much going on. But anyways, you guys got to start thinking about what's called pin action. And when usually it works like this. It's not always perfect, and we always got to speak in generalities, just over 50% of the time when it comes to the stock market, because anything can happen. But generally speaking, Netflix used to be the main leader of FANG. It kind of fell off. Then Tesla took its turn. Then Nvidia, and there's just always the market's always looking for who's the high beta leader of the mega cap stocks. Who's the canary in the coal mine that tells you something's wrong or something's good in the mega caps. And it used to be Netflix, okay? And the market hasn't forgotten that. And what usually happens is the cadence, the dance steps is like this. Netflix tends to report earnings a week or two before the big guys, before the other FANG stocks. And then it starts to create pin action because Wall Street decided to make the word FANG and put them all together. And then ETFs came out with it. So that means they're bundled together. So if one starts to move a lot, it affects the others. Hence the word pin action, like the word bowling pins. When you hit one pin, it affects the other. These are Wall Street terms to memorize and to know. And so when Netflix reports, if it's good results, it's going to have pin action on Meta, on Amazon, on the rest of the things. So that's something to watch for in the earnings call today. I think Netflix might have a good report. It looks like they got this extra bump, so it could be extra juice for Amazon. It might finally get it through that over the hump. It might take Netflix earnings to get Amazon and some of these other guys cooking after hours. So I'll see if there's a day trade in there or not. But that's that. Last one, and then I'll just pass the mic. There's more, but TNA is moving. That's the leveraged ETF for IWM. Last one is Shopify. I'm going to actually see if there's a day trade in there because it's kind of stuck around this 80 level. But if we get over 81, I could see it going to 82, 83 pretty quick. So that could be a decent day trade or scope there. It's got an upgrade to 90. So I got at least a little bit of a catalyst. I
One
think
minute till the
that one
open.
was Jeffries, but we can double check. Shopify got upgraded to 90. Market's about to open. Passing the mic to my buddy Exclusive X. Thank you for letting me have so much time in the run up.
No, you're good. And just to touch on Netflix, obviously, I've seen you guys' DMs, and I apologize in advance for not responding because I get so many DMs. I can't physically, I'm stretched too thin. But so with Netflix, I think it's important to understand the strategic development of this move and acquisition deal because their Netflix has been talking about for years, and they're actually live on ringing the opening bell at the New York Stock Exchange. This is the beginning of their venture into live sports entertainment, and that is a significant, keep in mind that word, significant shift into streaming content strategies that they've been talking about for 2 years, which is why before posting that freebie earnings over the weekend was I had to specify that the people that were invested into this name early are already up and positioned risk free. So it's really important to keep that in mind. So they're bringing in their international distribution rights, which is really going to add a lot of, I mean, it's valued over $5 billion starting next year. But that's going to give them revenue streams into events like WrestleMania, 150 hours of content annually streaming to the platform. And this is live content. Remember, we're not streaming shows here anymore. Now it's live content. So that's like their, speaking of which, before I go further, Abercrombie finally hit 105.52. So that's at about 200%. I'm scaling my long, 90% of my position today. Anyways, so Tesla's catching a little bit of a bid here at the open. I'm actually going to take some calls here.
Yeah, Tesla, nice move off the open. Good volume.
So I took some Tesla 220 calls yesterday, and they're back in my entry, so I'm going to rescale back into them.
Yeah, I'm gonna do a Tesla 220 call for this week as well. I like that volume off the open. Might give back a buck of that volume, but I think it'll get it back as well through the day. So about $4.60 here on my call on Tesla. And then keep an eye on Square. I haven't done anything there, but just keep an eye on it.
I've got 71
Um,
calls on that from yesterday. Just FYI.
oh yeah,
They're down. It was a risk-free hold overnight, partially. So most of my position is red on it, but it's down about 70% overnight. So could be some discount buyers on that.
Alibaba has been known to screw me in the past. FYI to everybody listening out there. So it's for people that know me from space. Like that's like the one stock I am bad at. It's just being really honest,
I think Baba and Boeing,
guys.
which is basically Boeing twice, those two stocks really
Right?
screw people over.
Yeah, yeah. I've done a decent job of Boeing considering what a horrific animal it is, but yeah, Baba tends to get my number though. Um, on that note, though, there's enough $75 call in Alibaba. May God have mercy on my soul this week. Give it a shot ski. It's about $4, 420 ish. I think I got filled at 415. Um, we talked about that weakness in AMD. It was like a quick $3 down off the open. Adobe sadly, real quick smack off the open $9 here down. I actually think it can bounce here. I like a six. Let me see here. All right, I'm gonna do a 605 call in Adobe, $3 and about 50 cents here in Adobe. 605 call, looking for a bounce in Adobe. I sized for 0, so if I got that wrong, it just went down another 30 cents on there, but I think it's going to bounce back. Adobe could be a thing where it's kind of weak today, and then Netflix has good earnings, and then tech has a little bit of pin action, and then that catches a bid. That could be a possible scenario as well too. Um, I like Amazon to get back this weakness too. Alibaba, those calls are up about 20 cents or so, 25 cents. Okay, 30 cents.
I'm taking some Western Digital WDC 60 calls weekly. So the key with Tesla is 212.69. If we can break 213.99, well, let's call it 214. We can get a push up to 214.72, which will put these up about 520, which is where I'm looking for. I took a trim at 470 so far, but again, I want more. I'm greedy. In that sense, I'm greedy.
Gonna do a 115 call in Enphase for about $2.60, like that. Just got filled. Yeah, around 265. It just popped as I said that. I just kind of saw the move on the 5-minute chart there. Okay. Yep. There's those are 290. So quick 10% on the Enphase calls. I know that was probably impossible for my little brother to be able to get in that quick. That's the way that goes. But I still like it here. I think it could get to 115.
Taking a trim on
It's
Tesla.
a lot on it, but it's got momentum.
Tesla broke 212.69 and went straight to 1213 point. I'm sorry, 213.99, but has not broken 214.72, which is what ideally we want to see. I took some Google 147 calls as well. Those are already up 20%, so there is going to be a slight delay. Just FYI, my fill's around $1. Oh, come on, Tesla break 5.
Yeah, I like Google. I'm already long the February 16 150s and March 15 140s. So not adding it to that, but I like Google there from what Exclusive said. Netflix. Fuck, the premiums are so juiced, but as long as we get out of them today too, I'll come back to that. I want to fucking shout out $2,000 contracts right now.
Yeah, I'm trading them, but man, it's it's a difficult
You got to
pill
know
to
what you're doing
yeah, it's
there.
a difficult pill to swallow when weekly contracts cost as much as May and June leaps.
Yeah, yeah, yeah. I'm doing 81 on Shopify. I should have shouted out. I just grabbed them before I was about to circle back, but it moved pretty quick. But I'm still there. I'm gonna add one, another one. So I'm here at this level, about a buck 35 on Shopify. $81 calls this week on Shop. TNA, nice move for those following along. I'm uh I'm not gonna shout it out, but I am long the February 16th 40s. So I like this thing going to 40, and I'm also long March 1st 38 spot fives, 38.5 on TNA. It's about 37.20 right now. So I'm obviously looking for more upside there. I just got a shit ton of it already. So um, Tesla, those 220 calls are working.
Hmm.
We got in at 420. Those are $5 now. Those are up almost 20%. So nice shout out from Exclusive, and then from me as well. I've been posting some. Everyone knows I took a big stake in Tesla recently, shares and options. A few $100,000 stake with options on top of that. So I'm a believer that we're near or at a bottom. We'll see. It might get fucked on earnings with Elon. You never know. But we'll discuss that later in a dead spot. I know Tesla's on everybody's mind all the time. I get it.
Oh, and for the love of God, if you're following people pumping WDAC today, please be careful. It's 400% implied volatility. Just as quick as you can make money, you can lose 100% of it.
Oh yeah, because of Trump and New Hampshire and Iowa and all that.
Yeah. As soon as DeSantis gave up his presidential bid, he said, "Oh, whoop."
Yeah, I guess when Nikki Haley goes, there'll be another little bump in DWAC, but that's all silly stuff. Um, Western Digital. I took a position there yesterday. Obviously, we didn't have spaces, so couldn't do a shout out. Couldn't get my little brother to look at that. But I do like it here. I don't want to chase it up. It was up $2 yesterday, $2 today. I'm already in it. I'm long the March 15th 60s. I see this going through 60 by then. Can it hit 60 this week? You know, if it holds over 58.50 for for an hourly chart or a couple at least 30-minute spots, that'll tell me wants to kind of hold that and expand at least. So I could maybe do a 60 call there. It's a little high risk when it's already up a couple bucks, but it's got sponsorship. What does that mean? It's got institutional flow, it's got upgrades, it's got major institutions saying to go that instead of Nvidia, and Nvidia is down now and that's up. So that doesn't mean that's how it's going to be. It's just always just short term. Okay, Nvidia is not going anywhere yet. It's just up a lot, and then people probably try to chase it. And they're like, saw it 600, they bought 610, 620 calls that go up more, and then it goes down and screws them. Okay, I think we got a good move here going on Adobe, guys. Oh yeah, come on,
Tesla
let's
tapping
make this another great fucking spaces.
Tesla tapped 215.18, which was my fourth target. Above that,
Okay,
215.52.
up almost $100 a contract on Adobe. $100 a con on a $3. What was it? 350 something like that. It's 450 now. I'm just on another screen, but that I got it almost near the low. All right, those are $5 now. It's almost it's it could be Adobe goes up two more bucks. It's 100% trade. So that'll be a great way to start spaces this morning.
All right, Google's back up 21%. Went to 28.
I like Amazon 155 calls here. Amazon 155s for this week. I got a lot of trades. I don't want to get too trade crazy, but $1.44 here. I'm getting filled on Amazon 155 calls for the week.
All right, I took another trim on Tesla right at my target. And remember,
Nice job there, X.
thank you.
I got that trade going too, but thanks for keeping us on track there. Because I'm watching a couple other names, and one of them being Adobe. We're almost at a bagger, guys. Those cons from 350 are about 520, 530. At $6-7, they'll be about 100%. And then I'll like to raise 50. I'll like to do stops 50% above break even if that happens. Okay, so we'll be prepared because that one got in a good entry, scoped it out. Was kind of confident about that one. That gave us the opportunity, that quick little fat finger trade of whoever did that. I saw it. It was across mid. Some big fucking portfolio manager just fat fingered a bunch of tech and try to get the market to bite. That's a longer story, but it's like a warning shot across a ship, like a cannonball across a bow, and to try to get the rest of people to like stop out or run stops real like a quick $9 off the open off Adobe. Either something's really wrong or there's an opportunity. And I haven't heard anything wrong, so I took the opportunity. That was my thinking there, and it just um, you know, guys, I want to tell you something important here, and I think I'm speaking for exclusive, and then I'm going to take the opportunity, unless something's really quick happening here, because always the first 30 minutes our attention's, very directed at exclusive, and I got a lot going on, so our eyes are and ears are everywhere. But what I wanted to tell you guys was a lot of times you will see what I call the front running of the tape, especially like in market open, and everyone's trying to get an idea. They're like, oh, that stock's running, that means that's good. Oh, that stock's dropping, that means that's bad. And that's often the opposite case. And I know exclusive knows that well. And like you need to like see sometimes where those little traps are. Okay. And the only way to do that is to be well prepared going into the day. And I'll give you a perfect example of myself. Okay. Last night, and you guys can see, man, I fucking work hard. Like I was working till midnight last night, and I started at 3 a.m. and I was back at it at 4 a.m. So obviously, I spent time with my kids. They took hours off, but I kept going back at it for different hours at a time. And I did another shift from like 8 p.m. till midnight. And it was a lot of the stuff that I put out for you guys this morning and last night. And one of them was Adobe, and it was right around the support level. That was right around where it stopped. So if you watched my chart and then put it through your own prism and looked at the support levels, and you're like, this is where that makes sense to me. I'm going to draw out my own chart and use this as an idea to spring. And you took the time and you like took my chart as an idea, and then you did your own chart, and you're like, where's his support? And does it match up where we're at? Yeah, that matches up. Or no, mine's slightly adjusted over there. And you make an adjustment, and you're like, I want to make my risk a little bit higher above the support, so I'll stop myself out there, or I'll trade for zero, knowing that if it drops for there, I don't want to put too much money at it, and that'll be my defined risk. And then you come in and you go, okay, so that area was around 590, I think it was 592 to 594 in Adobe. Look where it stopped today. Look at where it stopped, and then it bounced off that. So I had my own chart up because that was my homework and my preparation going into today. I was well prepared going into today, and then I saw that level. I took a stab at it, and what do we got now? You want to hear what we got? Those 605 contracts we took for $3.50 are $6.40. That's basically 100%. And what 6:30? It's 6:47. 17 minutes. 17 minutes. Why? It wasn't seven. It took me. Oh, you'll hear people say, and some of them my friends. I don't like when they talk like that. So just shout out to some of my closest friends. Don't talk like this. We'd be like, oh, trading's the easiest game in the world. I love it. It's not. It's extremely hard. But if you come in well prepared, you can potentially execute and be ready. And listen, if I was sitting there with my nuts in my hand, excuse pardon my French for the ladies out there, I should be more cautious with my words, but I kind of locker room talk always, but I apologize. But anyways, like again, if I was just like sitting there on my hands, all right, and didn't execute off of my levels, and it was like, that's also bad. You gotta be able to take the risk at your levels and know the defined risk. But if I don't take risk, I don't make money in this game. But that's where my risk was. And it happened to work out because I was well prepared going into the day. What did I do? I didn't start trading all these things I didn't chart and other stuff. I traded the thing I spent my homework on last night, and I posted it to you guys. And this happened in the last spaces. The last spaces, the stocks I traded were the things I posted hours before and the night before. I gave you guys my homework. And if you didn't spend the time to go over it and then come into our spaces and then not be prepared off the things that I showed that most likely I was probably going to trade, then you did yourself a disservice. That's to my little brother out there. As a reminder, all of my trades and positions can and will change at any time without any notice whatsoever, and are never meant to be financial advice of any kind whatsoever. With that quick disclaimer, exclusive, I think this is a good opportunity for me to give the announcement with a banger already off the morning. What do you think?
I'm here for it.
All right, guys. Here's an announcement that Exclusive and I wanted to make jointly, and I'm just going to make it for both of us. Exclusive and I spent several months becoming very close friends before we entered the spaces. We talked about our styles. We talked about how we felt we were similar to one another and where we were different. And we wanted to take the chance and take the time to do this. We both have different things going in our lives. It's not for me to say what's going on in his life, but I can tell you what's going on in mine. I have a baby on the way and I have two kids. I have my first son's coming. I'm like 2 months out, and my dad's not doing so great. So I'm going through a lot with my family. And I took a break from spaces in general, and I got a lot of good feedback, like Banana, we want you back. And I was like, what's a good way for me to come back where I could do it? And Exclusive and I, especially because of him, he was able to really create the support mechanism for me. He's like, I got you, bro. We can do it, a little bit, just a couple shows, see how it goes. And that was the idea. We were just gonna try like, episode or two, see how it goes. And so the announcement is this. It's gone incredible. We have really had a good time doing this with one another. We really feel good about where we are with each other and the group and the community, and the feedback has been the same. The feedback's been incredible. Exclusive could speak to that, but just saying, the feedback's been incredible from you guys. So we're extremely thankful to you guys for that, and that's led to the following announcement. We're gonna continue this ship. We're gonna keep sailing for you guys. We're gonna keep this thing going. We're gonna try to make this a little bit more of like a consistent, permanent thing. So the announcement goes like this. Today is episode 4. And again, back end, it's like a show for Netflix. It's like it tries a couple pilots and it hopes that it goes well and it gets picked up. Well, it's getting picked up. And we're going to treat this, and we're going to try to do something a little bit groundbreaking in the Spaces community. And we're going to treat this like a show on Netflix. And like today of Netflix earnings, we thought it would be a good idea to make the announcement. And how do those go? Well, some of the best shows are about 8 to 10 episodes, and that's what we're going to do. And we're going to have season one. And you guys right now are in season one of the Banana exclusive show, and we're on episode 4, and we're gonna go 8 episodes, and then we're gonna leave you wanting more. We're gonna take a little break. It'll give us time to kind of regroup with our families, and you guys want that. You guys want us refreshed, regroup, because look at the energy, look at what we came with, look at the info, look at all the charts, look at all the stuff we were able to share off the bat. And so that's our announcement. Today's episode 4. We're going for 8 episodes, so you guys got 4 more of these with us. Then we'll take a little break. The exact time of the break is to be determined, but we'll try not to make it too long. And then it'll be something to look forward to, right? It's like Curb Your Enthusiasm. So like you got this show to look forward to, then you got your other show, and then we'll look forward to season 2 of the exclusive Banana Show. And that's the announcement. So thank you thank you so much for the great feedback. You guys have that feedback and that energy, and the energy and the vibe that exclusive and I have has given us the energy and the reasoning to want to continue this journey and to make it kind of like a special thing. And we're gonna continue it out, and that's the announcement.
Yeah, the if I can touch on that for a minute, the feedback, and I don't know if you guys are aware, but there is an ungodly amount of toxicity and hate on Twitter or X, whatever you want to call it. So for this to be, I don't think I've gotten anything negative from these spaces at all, which is really, it kind of
Rare.
it's rare, and it reinstills my faith in X, Twitter. And I'm gonna keep calling it Twitter. I'm sorry. And
Yeah, I feel the same way.
I keep calling Block Square. I'm just gonna stick to what I know. And Facebook, Meta, whatever.
We should just call it Twitter, because X is going to be the super app that's going to have all these different sectors, and the sector that we're in is the FinTwit part of Twitter. We tweet,
Right,
we don't X.
right. Plus, it's been I was here first, Elon. So take that. So it's just it really resonates with me on a personal level because there's things that have been going on in my life the past year that I don't want to get too in depth because I'm trading, so I don't want to get emotional, but there are always things going on in people's lives that you just don't know about, no matter how calm they seem,
Yes.
how energetic they seem. You never know what's going on behind closed doors. And
Mm-hmm.
positive reinforcement from complete strangers, it might not seem like it does much, but it does so much more than you think. So I appreciate you guys. I appreciate Banana. Similarly, I'm gonna echo what he said. It's rare to find someone that truly supports you and doesn't just want you for clout, doesn't want to just be a part of something to get attention and sell something. So this Spaces was created to break the mold, change things around, just like I did with Mr. Beast post. I'm sure everyone saw it. It's viral. People are retweeting and stuff because they want free money. I want to win the post, maybe small chance to win, right? But if I win it, then I give my money away to people that retweet mine. So it's basically a giveaway to a giveaway. And my hope in doing that was to break the people that are greedy and make a trend of people getting that could win money to give it to other people or charity. So, what people do publicly or privately says everything about their character. So, Banana, I appreciate you for being real and true to the community. It's very rare, and that's one of the reasons why we even connected in the first place because, we have discussions in private, obviously, but publicly, we've been pretty apparent and transparent about our intention here. So, we're going to continue it, and the positivity again has just been immense. So I thank you for that, and I mean, we're just going to keep going. I mean, it's healthy, and it helps me.
X, that was so beautifully said, man. Like that was fucking beautiful, bro. Seriously, like no joke.
You know what? Some
Just very,
profits
very,
make it
very
feel better
articulate.
too.
Yeah. Couple quick trade updates here. Adobe, we got 100%. Those calls went to $7. They just faded a little bit off of that, but we were prepared. When it went to 100%, raise stops what? 50% above break even. Okay. How do I trade? I size for zero. Okay. So there's many ways to peel this onion. And sometimes I stop out. It depends on my risk factor too. Okay. But generally speaking, I trade like this. I used to do this. I used to put, let's say, $1,000 on a trade and stop myself out if it went down 50%. So I had money to try to get the next 100%. So I wasn't broke. Well, what happened was my option would go to like 450, right? Let me start that over. My Depending on what my option was. Let's say my option was $2, okay, and then I'd say I wanted to stop out at a dollar, right? So my $1,000 option would go to $500, and my option would go to what, 90 cents, and stop me out, and then go to $4, and it would happen to me consistently, and I'm like, what's going on here? I'm learning like everybody else. And what happened was my technical analysis was pretty good, and I really try to hone in on that and like really get good at my craft. And then what happened was a lot of times my it was like a treasure map, right? And X marks the spot, and the character would get there, except along the way an alligator or a boa constrictor or a swamp, only for me to get out of the jaws of the alligator, out of the constriction of the boa constrictor, and out of the mud of the swamp, to then still get to the treasure map. So I was like, how do I fix it? Like kept happening. I'm like, and I was like, if I don't spend a couple weeks or month like figuring out how to do this, I'm gonna be a hamster in the wheel spinning around, because I went up $1,000, went down $1,000, went up $1,000, went down $1,000. I'm like, what do I do? What do I do? And I tried a concept, and I found out, like, honestly, over only the last 10 years, that like some of the best successful traders do the exact same thing. I didn't know until that you start talking to so many of them. But I sized for zero, and I was like, okay, if I size for $1,000 and I lose 500 and I'm out, why don't I just risk the $500? It's the same. It's the same thing, and then I don't have to worry about being like I just see if my character gets there. I started to do that, and that's exactly what happened. I was like, get close to stopped out. I was like, oh, watch, they're about to stop, or they didn't, and I like went advanced, or they just stopped me out, and I was like, or I was like, I would have been stopped out, I should say, and I was like, I get to still hold the position because I define my risk. I'm willing to lose this $500 and see what happens for the next month, or week, or day, and then my whole game changed. It just changed for me. It could be different for other people, but it just changed for me, and I wanted to share that with you guys. So, but once something, and we talked about this in the last spaces, though, how do you protect game? So once something does go up to 100%, I do the following. I raise my stops 50% above break even, right? So let's say I put $1,000 trade, got lucky, got a bagger, right? It's up $1,000. Well, I say to myself now, I say, and then this happens a lot, and then I have to accept this part of it. Then I raise my stop 50% above break even, and I say to myself, at the least, I'm gonna make 500. At the least, if this thing wants to keep going, great. If not, at least I make $500, and that's a huge return, 50%. And
Absolutely.
then sadly, what often happens is I'll get stopped out. I'll make that $500, and then it turns into 300%. So be it. That's the way that goes. The way I try to fix that is, if let's say I have 10 contracts, okay, what I'll do is I'll try to leave at least a runner or two or three if I feel better about it, or four. Okay. But the majority's got to come. I got to protect something on the green. So I fuck it up sometimes and let a green trade go red. That's when I make a disciplined mistake. But for the most part, when I'm up a bagger, I try to do 50% above my break even. That means I'm going to protect 50% of that profit. And if that profit's $1,000, I'm going to protect $500. And if it drops just below to only go more, then I got fucked. And if I left a runner or two, then I get to participate in a little bit of that. And sometimes it'll not stop me out, just just before, and then it goes up 300-400%, and I'm like, oh great, I didn't get stopped out, and my entire 10 contracts gets to participate in 200-400% upside. Those are rare, but they do happen. And in this game, it's about survival. If you live to fight another day, you'll get one of those along the way. If you're blowing out, you won't even get to participate in one of those. If you try to get one of those every day or every week, you will get blown out. Okay? I hope you make note of just that little paragraph right there, because I'm telling you, it costed me millions of fucking dollars, a lot of heartache, relationships, fucking crazy thoughts in my head, dark, sleepless fucking nights to just get that paragraph solid. To just get that paragraph solid costed me so much that you can just write down. Wow, what a gift.
Dirty candle on SPX there, FYI.
Yeah, there's so much going on. Sorry, that's the thing with our spaces. If you're just looking for shout out after shout out after shout out after shout out, and you think you can manage fucking 50 trades, you wouldn't be here. Okay, I can barely do that, and I'm a pro. Exclusive's one of the best. He's got multiple positions. Okay, if that's what you're looking for, go next door. And there's nothing wrong with that.
Not one bit.
That's how we do it here. We do a little bit of that. We do a little bit of this. We do a little bit of this and like that and like this and
DocuSign's looking interesting
so
here.
Amazon 155 in the money. Sorry, got busy there. Those 155s, I think we took around one. I'm on another screen, 125, 130. Those contracts are about a buck 60. That's about 20%. Not bad so far. Okay. Exclusive's good. He takes trims along the way. You can do that. Some if I got 100 contracts, fuck yeah, I'm gonna trim 10, 20, 30% along the way. I'm not waiting for a banger. But if I'm a couple cons in, everyone has to know their sizing. For somebody, a small account, couple cons. That's the whole thing. You got to treat that like you got to treat that seriously.
Yeah, it's all about how you manage your tolerance to your trade allocation because every account's different, right? Everybody's got different money amounts, everyone's got different brain in their head, everyone's got different
Mm-hmm.
screen size, phone size. I mean, everything is different, right? Some people have the same setup, whatever, but you get my point. The
Yeah.
thing that you can control is your emotion. The thing that you can control is your patience. The thing you can control is your greed. Everything else, stop trying to control because you can't. I don't care if you're the best trader on the planet. No one can predict the market. No one can predict truly what's going to happen, but you can be prepared. You can react. You
Mm-hmm.
can adapt, which is why
Yeah.
things that like Netflix is a great example and Disney's a great example. Things that seem like I can predict something is not predicting. It's just being well positioned for a potential move that could line up with a fundamental, that could line up with a technical, that could line up with a geopolitical event or a catalyst, you name it. Pick something out of the hat. But you can't get there without a plan. You can't get there without execution. You can't get there without patience. It does not happen overnight. So stop trying to make it happen overnight. And that's all I'm going to say on that because and I see a DM here that's actually something I'm going to speak to regarding institutional rotation because I've gotten that question for a few weeks now on each space, so I might address that. But the thing that we're trying to harp on right now is that the lessons that we're trying to preach come from a lot of blood, sweat, and tears. And
Oh,
if anyone has ever said that it was easy or it is easy, is full of it because it is not.
mhm.
It is not simple. It is not easy. It is not cheap. And
X, sorry,
go ahead.
Shopify $81 calls are in the money. I'm going to raise stops on that one about 10% above break even.
I missed the
We're
sound
fucking
part.
doing it, man. We're fucking doing it this morning.
And we're keeping it light too. That's what matters. It's like it's manageable. It's not a bunch of stuff.
Yes.
Like I mean, I'm gonna go down the list of what I've traded so far. RTX, Baidu, SMCI, EL, PXD, UNH, Paycheck, PAYC, ELV, OIH, NICE. Are you catching my drift, guys? It's not about the amount that we can dish out. It's about the manageability of what we dish out and how you receive and digest the information. Okay, and
Yeah.
DocuSign's starting to break here. The the theme here is that
That's an interesting one. It's also a takeout target.
yeah, you know what? It's I've got the 65 calls. The I saw an interesting wick after hours and pre-market, and right now we're at the pre-market high, was what we just tapped.
Mm-hmm.
63.50 for for those interested in a long would be an interesting start. And 64 was obviously yesterday's high pivot, which could get a little bit interesting once we're above that. If you want to wait for a little better confirmation, wait for that 64 because that would also be the neckline of a cup and handle, short term. So there's things happening. Google's back up 20%, by the way. Um, but again, the theme here that we're trying to instill in the listeners is that it takes patience, it takes real time experience, it takes a little bit of self education, or a lot of bit of self education. I shouldn't say a little. It takes a lot of self education, and it takes will and determination. That's one thing that's not really harped on a lot in this space, not the spaces, but in the industry that we're in, is that it can be easy for a month and then it gets difficult for 6 months. And then it's a battle of self determination and your will to continue because we can't forget about the stages of traders, right? And if you don't know what the stages of traders are, Google it. There's a million articles, so I don't need to harp on that too much. But you have
Quick update. Sorry,
go
X. I'm going to take Snowflake. This is going to be a swing. February 16th, 210 call here, $5.30. Snowflake, February 16th, 210. Sorry, X.
no, you're good. And the I don't even really need to talk about this too much. It's just the point is just be patient and stop trying to get rich quick. Stop trying to break the cycle. It takes years to build and accumulate wealth. It doesn't happen in a year. It doesn't happen in a month. Or it doesn't happen in a week. And to believe that it does would be incredibly naive. And the reason I can say that and speak to it is because I was that person when I started trading. I was that person who threw 10 grand into the market in my early 20s thinking, I'm going to get rich. I know more than Warren Buffett. I know more than Charlie Munger. I know more, blah, 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 blah. And when I was down 6 grand, I was like looking at my 60% loss over the last few weeks I was trading. I was like, maybe I don't know everything. But the amount of information that was then, this is now, the amount of information, if I could have had a space like this, somebody telling me before I made the same mistakes, I mean, the value alone from that is just, man. So believe me when I say that we've been there and we know it's not easy. So, even if you're just tuning in and just listening and not trading, more power to you because these are the types of things that need to be said that aren't a sales pitch, that aren't to get you to buy a product, that aren't to get you to steer in a direction.
Yeah, exactly.
It'll mold you into a better trader because those are the things you can control: patience, emotion, and greed.
Yeah, well said. I like Eli Lilly here, 625 calls this week, $4.30. Gonna grab one. Just one con here. Lily's can run a lot, both directions, but I can see it possibly capturing some of that even today. Nice move out of Meta. For those following along, I posted my positions in Meta. I took I shouldn't say a trim. I completely closed the options at 390 because I had strikes still out like 360, 380, and I just restarted new positions. Luckily, I caught that dip around 381. Started new positions. I'm long January 17th, 2025. $500 calls in Meta. I posted all of this, so if you just search Banana 3 stocks in Meta and go through my Meta posts, you'll see I've been very transparent lately with a lot of. I just trying to share a lot with you guys, but I'm long Meta January 17th, 2025 500s. Those are about $22 a con, and then May 17th, 420s in Meta. But Shopify is doing well for us here. Those 81s are looking good. If this thing goes to 82-ish, it's going to be another 100% trade this morning. So watching that. Those contracts. Let me get to that screen. We got those contracts around $1.20, $1.25. Let's call it $1.25, and they're almost $2 right now, right? So at 225, 250, they're going to be 100%.
The DocuSign 65 calls are up 25% already. A little cheapy.
Nice.
That doesn't even have legs yet. I mean, that's just a baby move compared to what it could do once it gets attention. Remember when they posted the news the other week? DocuSign has a huge cup and handle that's been consolidating since last June.
Yeah, on the weekly, right?
Yeah, and if that thing can break the neckline, which is around 64.76 longer term, I mean, I own commons and I'm looking for 68 and 72, but that's
to be honest, that gap is like all the way to 100.
Exactly.
But it's hard to say that because it's like there's a lot of stops along the way. But yeah.
Yeah. But I mean,
that thing got murdered from $100.
I mean, it's basically back where it started. Well, it was back where it started. And when anything can retrace back to the IPO, I think to myself, okay, this is obviously where institutions are going to rebalance. They're going to go back to equal rating, or analysts are going to start pricing their targets, which is another thing I'll address here in a minute. I've seen you guys' questions. Everything that you guys DM or comment question-wise, I just jot down and put it in an Excel sheet. So don't think that we're ignoring you. I'm just waiting. And for those who are curious about the spaces, they are all recorded, and I'm going to put together a document after the season ends with links to all the recordings, and then you guys will be able to just tune in like an audiobook for free. So don't worry if you missed something or you can't remember something, it'll be recorded. So all Google
Yeah, good point.
Calls are back up 26% on Google on the 147s.
It would be sick if we like at the end of the season we'll like post all the episodes together and do like a season recap.
Yeah. I'm keeping track of all my call outs too on this. I need to go back to the other spaces, but I think I've done a good job of tracking what I've specifically shouted out.
Yeah, I think I have two, but I'm gonna double check that later today so we can have like a synopsis of some type.
Yeah.
Speaking of synopsis, that fucking stock is a beast.
You know what? It's actually
Man, the way I fucking puppeteered SMCI, holy shit! I was even proud of myself. It was I was like Edward Scissorhands that day.
I don't want to say it's like a goal because there is energy behind the goal, but the future achievement for myself on SMCI is if I can hold not 100% of my longs, because I've scaled out 95% at this point, because once it hit 485, I was up like 750% on common stock. But my goal for that trade, for that stock, is 1,000% on something that has a non-micro or small cap market cap. Just like with Shopify, for those who have been following me for years on the spaces, my record, and I swear, but this is before we knew each other, I called a Shopify trade that went 76,000% live on spaces. And I thought that I would never, ever beat that record. I was like, that's once in a lifetime. That'll never happen again. And then SMCI happens.
That's fucking nuts,
And
man.
that trade, and you guys don't know this, I was actually DMing Banana and behind the scenes. I was like, dude, this trade's up 20,000%. And then it was up
It's
40,000%.
crazy.
I paper handed over 100,000% and it went an additional 40,000%. So when I tell you that you can never predict what will happen in this market, no one will ever predict it. So just keep that in mind.
If only we full ported that one, huh?
I mean, who does though? Why? Who in their right
You
mind
can't.
would like? I had a few strikes and I took a few more roll-ups that day with profit, but
You can't.
who?
I always say this, and everybody pay attention to this. You guys are gonna crack up. You'll like this one. All right, so it's like on FinTwit, right? Like every week somebody got fucking 2,000%, 5,000%. Do you know that if you started with $100, it just takes 10 times of getting 1,000% for you to be a billionaire? And it's like every week, you would think that every week, literally, some other furu either became or turned somebody into a billionaire, except for the weird fucking mathematical fact that there's only a couple thousand of them in our country, billionaires, that is. But apparently on FinTwit, there's like a few 100,000 of them. So you can judge for yourself, but the reason that doesn't work like that is because you can't fucking full port a trade because of what Exclusive just explained to you guys. You don't know what can happen in the short term. All right. And people ask me this all the time. It's like, like, and Nvidia went up, like, or SMCI. They're like, what now? What now? What's going to do? Do you like 480 calls in SMCI this week? Like, damn, bro, that's some serious FOMO question right there. Look for an opportunity that isn't that. Like, we just fucking made 100% on Adobe that went down $9 today. You're chasing fucking SMCI of $50. You'll fucking, you know, rip your arms off. You got to think of it like trains. When a train leaves the station and you run up to it and jump on it, yeah, maybe you but most of the time you'll get your arms ripped off.
DWAC's a good
So
example too from the open. I was like, please, for the love of God, don't chase it. The 50 calls were at 850 and they're at 390 now. The 45 calls are at 980. Those are down to 530. You get my drift, and the implied
yeah,
volatility is still 330%. So there's been a little bit of a deflation in the implied volatility, but it's still extremely risky. So the people that were, pumping it up to their groups or whatever, all got wrecked. But you won't see those posts. You'll see, I made 100,000%. I made, you know, but I'll be the
yeah.
first to tell you, you only put a couple bucks in a lottos. You know what I mean? Like that's 100% just in case it goes crazy, in case it breaks. I'll put $20 here. I'll put $100 there. No one's putting a 100,000% on $1,000. We wouldn't be having this conversation because I'd be in a remote island somewhere. Because
Right.
because at the end of the day, those types of gains only come from like 5, 10, maybe $20, which turns into, translates to like 8 to 25 grand. And that's an insane, incomprehensible return for that amount of money. But it's like, think of the lottery. You put $1, you put $3, and the people that win, the Powerballs, it's the same situation. You're winning an incomprehensible amount of money from a minute investment. Every day is like that in the stock market. Obviously, you don't have a potential to win, hundreds of millions unless you're an institution, but it's just they're never going to gamble with that kind of money in the market. It's going to be, I'm risking 10 million to make 100,000. I'm risking 20 million to make, 200,000.
Dude, your longboard keeps going up, huh?
Oh,
Thing's up another $3 today.
dude,
I just accidentally did it on my biotech screen. I think bios are gonna. I like XBI here. I think I posted some XBI positions, maybe a chart or positions and a target, but enough out there to search my name and see what I think about XBI. Q's took a little bit of a dump here, but nothing crazy. Adobe, if we were true to our 50% above break even, could get stopped out or leave some runners. I still think it can go up more, but there's some discipline there. Listen, it was a great trade. Went from 350 to $7 to the dime. Literally, that was almost the low and high of the day so far. So make what you will of it. Amazon came back off 155. So
oh, and for
there were a lot
those
of good gains, some things coming back.
for those who are curious, longboard is not an Abercrombie and Fitch, because those who know I've been talking about that stock once or twice the past year. We're talking about Longboard Pharmaceuticals, which was one of the first callouts in the first space, ticker LBPH. We added around 12.75. It went to $30, and we've been risk free, and now it's back up to 27 in regular trading hours, not after hours or pre market. And again, if that thing can break over 31, I mean, that thing can go to 35 longer term. So, not financial advice,
Mm-hmm.
but this has been a long consolidation.
Snowflake got a good bump off of where we spoke about it. I was in a little bit before on the swing, but I added the February 16 210s. Stock was about $200. It went to 203. It's sitting around 202 now. Those contracts went real quick from $5 to almost seven, like 680. Now they're around 630. So $130 to $180 a contract in swings out to February 16. 10, 15 minutes later. Look, guys, I keep trying to tell people this without giving financial advice. They're just my experiences and opinions out there. But I keep trying to explain this. And this really dovetails off what Exclusive was just saying. Okay? Look how, dude, $100 a contract off a $5 stock. Is that pretty good, X?
Absolutely.
Right. And it wasn't this day trade or this week, so it was like wasn't under very fast volatility pressure and under our mental pressure. We're like fuck, worthless. Is this going to expire worthless? Is it going to expire worthless? Right. It's a lot of mental pressure. And so look at the way I traded today. And it's really important. Okay, and maybe you can make note of this or just kind of mental note. But how do I want to articulate this where it really, really paints a picture? I think I have an idea. This is the way I want to explain this. Let's say I had $10,000, so it's like a nice round number. It could be 100,000, it could be a million, it could be 1,000. But let's say it's 10,000. Let's say I have $10,000 to trade with, and this is the dovetail off the beautiful rant Exclusive just did. You think I'm gonna put that 10,000 into this week's expiration, or like a lotto far out of the money on Thursday or Friday, or an ODTE today? I'm not. Maybe you are, but I'm not. If that's my trading account, that 10,000 or that 100,000, that round number. I'm not. But I'm there. Like I'm not like a paper trader. Like I'm a little bit of like a starting trader, but like a trader that needs to make money from this. I decided to be a trader, so I have to put risk to work. Okay. But I'm not gonna fucking put it on, like we just said, this week's expiration or that lotto, like Exclusive explained well. That's like $20 can turn into 10,000% or et cetera, et cetera. Okay, this is kind of the way I'll approach it. Maybe out of that 10,000, 1,000 or $1,500, I'll trade for that week, and that's a lot. And that's a lot. And then intermediate term, let's call it weeks to a month. Okay, maybe it will be another 2,000, 3,000, and that's a lot. But the majority, 5, 6, 7,000 of that 10,000 is going to be things that have time. And then somewhere in there, for even for 4 or 500, for 4 or 5%, I have to do for my. This is the way I trade. I have to create a placeholder of shares. What's that mean? I have to buy one fucking share of Amazon or one share of Shopify. All right, that's $150 and $90 and $80. That's $230 of the $500. I at 5% I allowed to budget for that. Why? Well, what's the placeholder mean? It's psychological. Okay, and this game so much this game is so much fucking psychological. Okay, I'll explain you a lot of good psychological tricks in these spaces along the way. I've got fucking 25 years of experience. All right, um, but one of the good psychological tricks here is that I say to myself, okay, I'm gonna buy time, and then I'm gonna have that placeholder so that when one of these short-term options or intermediate or even longer-term options, most likely it'll be a short-term because then I have immediate gains if it works out that way. What do I do with them? And you guys gotta remember this or write this down. This is fucking key to trading. All right. Most of you will do this. You'll have a $5,000 Robinhood account. Okay, you'll fucking buy ODTEs and short-term options, and you'll be like, "Fuck it. If I lose it, I'm just gonna save up another paycheck or two or three or four, and or fucking borrow money from my friends or wherever I'm gonna, or
Insane.
sell fucking this, and refill the coffers and find another way to turn that 5Gs into 25 grand real quick. Because 25 grand, oh, I could do something. That's fucking rent. That's a new apartment. That's a fucking down payment on a car. That changes. But 5 grand, that ain't gonna fucking change my life." And that's a kind of stupid way to think. All right. And then what's a good way to think is if you that 10 grand, again, round number, same thing, almost same thing as 5 grand. Okay. You take a small percentage of that. And then if it works out, you got to put it into something that can't be taken away from you ever again. You got to justify the luck. Okay, so let's work through this scenario for a second. This is more important than the shout outs right now. The market's doing its own thing. We made a ton of money already, or we didn't, or whatever. Okay, judge for yourself. But let's say I have that 10 grand and I put $1,000 into something short term, right? And it doubled, but then we got stopped out because we did our 50% above break even, so we only made $500. All right, what do I do with that $500? Most of you will put that $500 or that $1,000 right back into a short-term option and then fucking give it right back to the market. Okay, and I do it. I do it a bunch still too, but less. Okay, and the right thing to do for both of us, my little brother and myself out there, all right, is that $500, even if $200, right? We said 230 is that share of Amazon and Shopify, and you own a piece of the best e-commerce companies on earth. Okay, that can never be taken away from you now. That $500 you're about to give to the market, 230 can never be taken away. And you're like, yeah, man, but what if Shopify goes up $3 on one share? I'm gonna make $3. That's not gonna fucking buy me rent, or I need 5 grand to turn to 25 grand. It's that thinking that's gonna keep blowing up that $5,000 account. But my thinking on that $10,000 round number, you made $500 now. Now we own a share of Amazon. Excuse me, of Amazon. Where's my water? Amazon and Shopify, right? What does that do to you mentally? And this is the important part. At first, you're deflated. I know this journey, so I just need to get you through the first part. You're deflated. Now, just what I said. What the fuck am I going to do with a share or two? But here's what starts to happen. This is the key. You created a process, and everyone's like, I want to find some Discord so I can create this. You just write this fucking down right now. I'm gonna give you a fucking process. Okay, you just created a process. All right. Now the next time you make $500, another 230 is gonna go. You're gonna have 2 shares of Amazon and 2 shares of Shopify. Okay, and the next time, now your account just grew $300 on both sides, so $600 up. Okay, so now you have 5,600. All right, and you only did this with $1,000, these trades. All right. something along the line, you did this consistently, and then something along the line worked out in your favor, like Exclusive and I said, because you were being consistent and disciplined, and you did your stop outs. And this time, it didn't quite stop you out. It stopped at 60%, and then the fucking thing went 300%. Okay, and now you got 2 shares already of Amazon and Shopify, but now you can buy 8 of each one because you hit it. You made $2,000. All right. What do you have now? You have 10 shares each. Now something changed in you mentally. You'll see it then, and you mark my fucking words. You'll be like, "Fuck, that banana guy came through for me." And you say to yourself the following: something happened here. It's a mental switch, and you're like, "Ooh, ooh, what if I have 20 shares of Amazon?" When you have 20, you want to have 50. And what happens between the journey of 20 and 50, you start researching. You're like, what does this mean to me? You're like, what is this guy talking about a covered call? What's a round lot? What are these terms? Hopefully you're writing this down right now. A round lot is 100 shares of any said stock. When you get a round lot, what happens? What's the banana talking about? What's this mean? I'm new to this stuff. What's an option contract? What's one option contract? One option contract is 100 shares of said security, of said stock. It's 100 shares of your fucking stock is one contract. Okay? So there's things in the derivatives world, which is now, if you're like, oh, I just do shout outs and hear puts and calls. You're in the derivatives world, my friend. And in the derivatives world, there's a lot of things you can do once you have a round lot. You can write covered calls. You can do covered puts. You can do things in the market to create income streams almost favorably to you because you just became an owner of an asset. You became an owner of this apartment building or a car that you can rent out to someone else. You can own it and collect income on it. Your 5 shares became 10 shares, your 10 shares became 20, but at 20 you wanted it to be 50, and 50 you're like, I got to do everything because now you researched, you learned. You're like, I'm looking for 100. I have a process. If I keep this up for another 2 months, 500, 600, 1,200 there, I'm going to have 100 shares of Amazon. That's 15 grand. And it allows you to start writing covered calls and start making 500 or 1,000 bucks a month or 200 a month. That's a much different conversation in a longer spaces. And I'll do one based off of that one day. But that becomes an opportunity set to you, all because you put a fucking placeholder out there, all because you put 1 share or 2 shares out there. Now you're going to get 5. Now you're going to get 10. And when you get to 20, you're like, I've learned, I want 50 because I want 100. And now you're excited. You're like, I'm 5 away. I'm 30 away shares. 2 more, 5 more. That's the mental change that happens when you create the right process, and you can create the fucking right process with a $5,000 or $10,000 account. But if you have a $5,000 account and you're looking to make 25 grand quick, you're just going to keep blowing up your account. You will get rich semi quick. There's no get rich super quick. Get rich super quick is get rich super broke. But you can. I'm rich, but it's a snowball. The snowball's got to get going down. Then it becomes an avalanche down the mountain. You can't just start avalanche at the top of the mountain. That's not how it works. That's not how it works. Trust me, I'm a mountain man. That's not how it works. And why does it work like that in nature? Because stocks is nature. Stocks is all the fucking people out there in the world thinking. It's nature. We're fucking humans. We're nature. That's why Fibonacci sequences work in this, because it works through nature. It works in us because we're fucking nature. We keep repeating the same mistakes and the same things. That's why charts work historically. They're past performance not always indicative of future performance, but history rhymes, and that's how we find ways to get into stocks. We find rhymes and patterns. All right. I think that was a good rant because it really dovetailed a lot of what Exclusive was saying, a process in a couple paragraphs. You people fucking downloading YouTube videos or have somebody holding your hand for fucking 5 months, paying them a fucking $500 a month, $100 a month, or whatever. Some people are worth it. Obviously, the guy I'm with here is worth it, but 90 fucking percent of them aren't. And And I keep repeating this, but I want you guys to get a feel of who I am and how I feel about the FinTwit community. You got to earn your right to be a doctor. You got to earn your right to be a lawyer. You got to earn your right to be a good trader. This is just as complicated when you really get into the crux of it. Okay, so that's that. Let's see what's happening back on the screen. I literally like was away from the screen because when I get into the emotional rant, I focus and I image these experiences that happen to me, and they're just as important as the trades because it's literally the journey of trading. It's the pitfalls. If I had somebody who did this for me, what I'm doing for you, it could have saved me so much fucking heartache and money. A, you have to buy into some of it. B, you have to have a little bit of hard knocks lesson. But C, if you buy into a little bit of A, you get less of B. Okay? And that's what good doctors and good people of their craft, they learned from the welder that was before them. Their granddaddy was a welder. Their daddy was a welder. It's a very difficult craft to be like a superb welder. Anyone can just learn to weld. But like the welders that do fucking submarines, those are like they only look for people. They're like they won't hire you unless your fucking great grandfather was a fucking welder. All right. There's things to these crafts. All right. And the way you become a great at a craft is if you take a little bit of experience, right? How do doctors become doctors? Because they fucking read the medical books of all the doctors that came before them and then built off of it. If they started completely from scratch, they would only get so far. So you have to believe and find the right mentors out there and buy in and find the right research. But at the end of the day, it's going to come down to you.
Yeah, I mean, well said. I mean, it's that's probably one of the best analogies, the medical doctor thing. I mean, it's just
It
it's
hits
so
home, right?
true. But I do want to touch on the Fibonacci thing, and I'm going to give everyone an example on
Yeah.
why it's my primary source of technicals. Look, pull up your charts and type in BTC USD, Bitcoin US dollar, through Bitstamp, and look at the chart using Fibonacci, which crypto respects Fibonacci even more so. Same with futures than an underlying stock because there's no option, theta, vega. None of the Greeks can influence this, right? Unless you're on perpetual contracts. But that's neither here nor there. So using Fibonacci, it looks like I was able to predict a 200% move on Bitcoin. It looks like there was a way to know that this was potentially going to reverse back in November of 2022 and go all the way to 48,555. And this is just a retracement and then a rally based on math. And there are specific algorithms, there are specific strategies, there are specific things that have to happen based on math, that happen whether you want them to or not, based on math. And that is the epitome of a purely technical move. I don't care what the news is, was, can be. Everything I see in the market is based on math, and that is the perfect epitome of a technical move from a point of math to a point of math. Look at what Bitcoin has done since it hit my final target of 48,555, which was a 618 retracement golden zone on Fibonacci. It is down to 39,000. That's almost a $10,000 retracement since the target was hit. Why do you think that happened? Why do you think the spot ETFs happened? Why do you think everything correlated around Bitcoin happened at one specific time? It is because it is based on math, period. That is all the stock market is. Whether it's crypto, whether it's futures, whether it's commodities, I don't care what the investment vehicle is. Everything that has to do with money is based on math,
Dude,
period.
fucking hear, and preach. You know how like I literally some of my posts are like learn math. It's like at the top of the post.
I mean, that is all it is. Stop making it about indicators and algos, whatever you want. I don't know all the terms anymore. I don't even use it. Whenever I post a chart, there'll be some lines, there'll be some fibs, but I don't use any of that. And I like to think I'm one of the better people out there, but there's always someone better than you. But my strategies and everything that I've learned over the time has been all self-taught, just using math and the study of historical math. That is all trading is and ever will be, because it's based on money. And what is money? Numbers. And what is numbers? Math. That is the blueprint to the market. You don't need anything else.
Yep.
And if anyone tells you otherwise, it's just, again, we'll say it before, I'll say it again, it's just to sell a product. You don't need it. If you learn how to read candles, which is what the study of volume and price analysis is, just the candles. You have an open, a high, close, low. That is all you need. And the greater the time frame, the more historic data you have, the more relevant the candles become. You can not predict, but you can prepare for moves potentially to happen based on what has already happened. And then everything else is just confluence.
Yeah.
The indexes, the indices, the futures, the commodities, the dollar, the the
That math just permeates everything, like you're just saying.
exactly. It's just,
It's like
you know,
water that goes through the whole bathtub.
yeah.
You
But
know,
anyways, I'm
to your
rambling.
no to your no. These are excellent points. To your point, um, I'm gonna make like a key point to your point, and we got the right audience for this with some of our like super super close friends and core members and stuff like that. Um, Crypto, Cam, Dead Money, Debo, some of our real close friends and listeners out there right now. You guys remember? I literally, as exclusive just said, day after day. And this is coming from a lifelong technician. I've drawn or seen a lot of charts in my life. Let's put it that way. Okay. And I studied them. And like he said, and there's so much math that goes into the way I do it, X does it, and historical math. And one of my favorites is Stock Pattern Pros out there. Shout out to him. The math that he puts into his pattern analysis, it's mind-boggling. Like I can't even keep up with it, and I like to consider myself, like I said, a pretty decent mathematician. But to the boys I just mentioned, remember guys, remember I did this following. I kept laying out the math on Nvidia. I kept explaining it. I even did like a deeper analysis for those that remember with the shares outstanding, how to calculate that, like a deeper thing. But then I did what's called the simple math. Once you got that complex part, that gave you like the numbers to plug into like an algebra formula, right? So I did that hard part for people and I showed my work. But then there's like medium math where like you still need to know how to like work a model through. And I gave everybody the numbers and then I explained how Wall Street, how analysts literally, because I was going to be one, how they model things and how they think about it from sell side and buy side. Okay, and literally I pounded the fucking table every day explaining to people as soon as I got a grasp of Nvidia's guides and the trajectory, and that you can use what's called a Kager formula, CAGR. That basically tells you the rate of which your growth is growing. Okay, and and it's like exponential for, so you put like exponential math on that. But long story short, I broke it all down and then I simplified in the simple math. I made it that like fucking a goddamn fifth grader could understand. And I broke it down and said a while back that there's no way for this stock not to get to $600 a share because of what Exclusive said. Because why? Because the stock market's revolved around money, money, money. Okay? And money revolves around math. This is why I wanted your point. You were like, I'm rambling. Your point was like one of the fucking most crucial points of the entire stock market. Okay, math. Like, I'm rambling. No, you're not fucking rambling. It's the fucking key fucking goddamn episode 4 rant. All right. And the mathematics behind that, there was no way that the chart where we all think the chart leads, like we're all sitting there like looking at our charts every day, like, oh, can I see your chart? I get it, I'm a chartist, I get it. Okay, and then it looks like, oh, how did Banana know his chart goes exactly like how he drew it? There's a lot more to it than just like I'm above this line and the MACD just bullishly crossed. It's because of what we're talking about right now. It's all of this that tells me that that roadmap is going to play out on the chart. Everyone sees a fucking inverse head and shoulders. You think I'm like the rest of these ducks out there quacking? No, it's this stuff that Exclusive talked about that makes me say, oh, that inverse head and shoulders is going to work out, and or that head and shoulders is not going to work out. You guys remember how many posts I try not to do it where I like made fun of the people, but I bookmarked it and like added my trajectory in my interjection, I want to say, and so I could later repost it. And I did a lot with it with a lot of stocks, and one of them was Nvidia. How many head and shoulders to the 350 gaps did we see? How many? And they're like, oh, I learned to trade from this Discord, or I read this trading book of Japanese candlesticks. Like, oh, you did? Oh, wow, fantastic. And what happened to all those people? Why? Why? Because the fucking mathematics that I was telling you guys for 6 months had no choice but to play out. Okay, the shenanigans was institutions. It's a long story, but they painted the tape constantly on that thing in order to create the look of the stock being under pressure so they could accumulate more shares and it wouldn't cost them. What does that mean? If your thinking and my thinking when I used to run money and how a portfolio manager thinks are completely fucking different. They're not looking at your charts. They don't fucking care about your day trade. They're like, if I have 5 million shares of Nvidia and I sell a million of them today, the stock's gonna go $20 down just from my own sales, and everyone's gonna think something's wrong or this, and I'm just gonna cost myself a bunch of money. They need to be able to move in and out of those positions kind of like fakingly. Otherwise, they're going to fuck up their own trade because they have so much of it that it'll move it. Your 1,000 shares or 500 shares ain't going to do shit, but their 100,000 or a million shares is going to do shit to it. Okay? So when they fucking start to move that stuff, it starts to move our stuff. All right? But what they try to do is they do things with derivatives and brokerage houses and called working the order. They don't want to fuck with their 6 million shares, so they take a million shares from the brokerage houses and it's called working the order. And they like make it look bad or make it look good and do different things in order to accumulate more of it. Because again, on the other side, like I just said, if they sell a million shares, it's going to go down $20. Well, if they buy a million shares in one day, it's going to go up $20 too, and it's going to cost them fucking too much to get in. So like, how do I get a million shares with this is how they're thinking. They're like, how do I get a million shares more of Nvidia with it staying around 450 to 480? And that's what they were doing until they got enough of it, and then that was that. That's how this fucking game works, guys. All right, and it works because of the math. And
Oh,
then
real
the
quick,
math I
man.
explained to you, and this is
Taking a
circle
trip
back
on
to the whole
Google.
thing. I was pounding the table. You got $20 of EPS times a 30 multiple. I explained, and there's tons of my posts how I come up with that. And we talked about multiples earlier in this space, so I think this space does a good job of recapping so much different subject matter. Okay, but $20 of EPS with a 30 multiple, that's like fucking. It's like coffee shops. You understand? If I went and bought a coffee shop that's successful from somebody, all right, I'm gonna pay 4 times sales. The fucking Nvidia is trading cheaper than your local corner store fucking coffee shop. Does that make any sense to you? No, it didn't. That was I kept explaining this to people. And then, go to 350, go to 350. Maybe because over profit taking, some correction, overshoot, anything can happen. But the math was going to win. The math was holding all of that together. It could because if I ran money and I know how they think, that's what the people who are running money have to. That's they're not sitting there. They got to do that. That's their job to do that. So they're in there doing their job, feeding that thing, and we're all like, oh, 350, 450, and I'm like, how do I explain to people this is what's going to happen? It's like I'll just give the math, and then some will believe it, and then when people see it, I was like, because I'm a fucking banana. I don't even have my real name out there, and that's just to protect my children. That's all it is, because there could be crazies on the fucking internet, and I'm not a flosser. If I wanted to floss, I'd have my first and last name, link a YouTube, put my Instagram, show you all my dope cars and houses and all that fucking shit, and it's not my thing. All right, but you can get a sense of like who I am, my success or not, the feel for me, the way I'm doing it through my genuinity. Is that the right word? Genuineness? Sorry, genuity. It's one of those. It's fucking one of those words. Okay, I need a Brit. I forgot how to speak English. So I need
You
an
were
English
right,
person.
genuinity.
But yeah, so you guys get the drift. I mean, that this is what's special about our spaces. It's these rants. It's not the shot. We got stuff going. We're pros. Maybe we would have fucked up one trade, and we wouldn't be horrible people for it if one out of five spaces we didn't nail it. But every spaces we've been nailing it, and lucky for that. But the key, we won't. Maybe we should do a spaces where we lose money. So just to, just to throw it in there, because but you get the feel. This is what this space is about. Is this conversation, is what X said to make me think of an experience, get me all pumped up, get my passion going, get me into a rant, because that'll motivate you guys to think a certain way and save you the time, and maybe just maybe I can be the first couple chapters of a medical book, but you should be skeptical because I'm a banana, and you shouldn't listen to a fucking. You tell somebody I lost 50 grand because I listened to a banana on the internet. That'll sound stupid, right? And that's why I've explained why I named myself, but that's kind of the cute character behind me, is like, don't you think I'm a fraud? Good. You think my charts are wrong? Good. I'm not. I'm opposite of everybody on Fit. Good. That'll make you question it. That'll make you think about it. That'll make you maybe look through my stuff more, which makes you do more homework, right? Hashtag more homework. So I'll stop right there and just fucking give my voice a pause. I'm gonna go use the restroom too, X, for a minute, and I'll come back in a couple minutes. Maybe you got something to throw out there and can recap some trades, but I'll be back in a couple minutes. I hope you guys really enjoyed the spaces this morning, because I honestly, I did these spaces with other guys and I love them to death. But there's something really magical with exclusive. He's a really intelligent guy. He's really heartfelt. He's articulate. He doesn't go into like, he's not like crazy like me. He's just like very level headed, and we need that because I'm a nutball. And then you have a spaces with like five fucking nutballs. It's like, you like can get lost in there. So he keeps me very grounded. So just want to thank him again for like everything we talked about this morning, and just like getting me inspired to because in the other spaces I have to like sometimes like find the it's because like we're lost, like everyone's doing their own thing, and there's nothing wrong with that. There's a beauty to that too. But like I got a little bit lost in the weeds with like where I could be productive and between my shout outs, and get my experience going. And the cool thing with X is he's so knowledgeable, right? So he triggers these events where like before I had to like concoct them, kind of, if that makes any sense. But he like really lays down the groundwork for so much different experiences to flash through my head that then I could share with you guys, right? So I appreciate him for that as well. So I'm gonna cut out for just a couple of minutes. I'll be back within like 3 to 5 minutes. X.
Sure. All right, so while he's gone, I'm gonna answer some of these questions. If you've got one, just post it in the comments. But I'm gonna address one that I've gotten a few times about institutional rotation. Again, this is gonna be based on my opinion, nothing more. So, so there's different things that I want people to understand too, because there's multiple layers to this, okay? So just like a trade has multiple layers, you have your fundamentals, your technicals, your catalysts and geopolitical events and economic data, blah 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 blah. So with the fundamental side, you've got key rotation indicators, if you will, from an institutional perspective, and primarily it's based on diversification, rebalancing, and the overall theme or thematic rotation. So, to the point of diversification, okay, the goal of an institution, they have to spread risk on different asset classes. They're not just trading options. They're not just trading stocks. They're not just trading commodities. They're not just they're not just trading yields or REITs or anything. It's diversified through multiple asset classes, multiple industries, and geographies. That means they're invested in multiple markets, not just the U.S. market. You have the European markets, Asian markets, etc. So you have to understand that from an institutional perspective, it's going to be diverse. And we I talk about this specifically all the time between sector rotation. You see rotation in the sectors because of the rebalancing and the overall theme. So, in the beginning of last year, the overall theme was the labor market, inflation, recessionary fears, etc. You've been there. I don't need to repeat all that. And we wanted to see a rotation back into tech, back into communication services, and over the past 6 months, it's done that. We're up, what, 15, 16% on tech. Com services are up 14, 15%. Don't quote me on that. I could be wrong. Over the past half year. That's not just a recent move. I mean, obviously, over the past week, tech's up 4.5% almost. Communications up almost 3%. That's just in the past week. But we're looking at the broader markets here. We're looking at institutional level of rotation, and that's what you have to pay attention to, the seasonality and the overall theme of what's happening, whether it's based on AI, whether it's based on semiconductors, whether it's based on monetary policy and institution and banks and finance as a whole, how much they have to hold on their cash reserves. And you have to understand the diversification, the rebalancing, and the thematic rotation, which is the overall theme. Um, and those are the shifting investments where they can capitalize on emerging themes. And again, this is to my point that I've made multiple times about laggards. Just as much as momentum matters, so do the stocks and sectors and its sub industries that are getting beaten down, because that's where the opportunity is waiting. And a few months ago, I posted, stocks that were hitting 52-week lows. I could pluck any one of those stocks out, and some of them have, except for AMC, some of those have reversed 10, 20, 30% off the lows. And that's just a laggard thematic rotation where you get some, for last year, the technological shift was AI. AI is not new, but when the theme, quote unquote theme, started to become mainstream, and now the mainstream media and companies and commercials and social media, everyone's talking about the same theme. Just like now, everyone's talking about the same theme around semiconductors, chips, processors, GPUs, etc. That's a technological advancement, market shift, and demographic shift, which means that there's more than one demographic now paying attention to the same theme. Whereas when something is lagging and it's getting sold off, it's because there's outflows from that theme. There's outflows from negative catalysts. There's outflows from, just like you saw with Boeing. People were selling airlines around Boeing, and then, yeah, I don't need to go over that. But now people are piling back into it because now they're talking about going back on block deals. They're tightening inspections, they're tightening processes, and yada yada. That's just rotation back into, out of, back into, out of. And when you understand how the rebalancing works and how much the, I'll get into how the analysts calculate all this stuff, but when you start to see how institution level money, and we're talking about 7 figures plus, or let's call it 10 and 8 figure plus, when you start to see how this type of money rotates and how you can catch those moves, that's when things start to click, and that's when the investments start to take a more prominent term on common stock if you're a long trader, or investor, not day trader, because investments are different vehicles. It's a different time frame, 3 to 5 years, 10 years, 20 years, versus hourly, daily, weekly. So again, write that down. This is recorded. Diversification, rebalancing, themes, or I'm just calling it thematic rotation. I'm sure there's some books or articles about that somewhere. Just
Dropping
Google it.
gems, huh?
I'm on another rant.
Nice.
But this is a question. This is a lot of questions that I've gotten about the same thing. How do I predict or prepare for rotation at an institutional level? And I'm trying to. So far, I've gone over diversification, rebalancing, and theme rotation.
Mm-hmm.
Um, to where people have to understand. Well, it's recorded, and now I'm going to move to the next part of that because, like we've said, there's levels to the trade. There's levels to the institution. Now that you have a grasp of the fundamental side to their rotations of diversification, rebalancing, and themes, now we can look at the influence of what they're paying people to do. That's where analysts come into play. That's where guidance and price targets come into play.
Nice sound effect.
And hold on.
Okay.
And the institutional investors, they interpret these analyst price targets as signal of securities potential
X,
over.
sorry, one of our stocks is breaking out. Snowflake, the 210 February 16th, the stock just went up like I have to check if there's news. It just like went up like $3-4 in a straight shot while the market's been pulling back. Something's going on there. I'll try to see what it is while X is talking. But we got in on $5 contracts. Okay, on Snowflake. That's one of my few trades. That was a spotlight of this morning. Especially if I want to swing, that like tells me like I'm a little bit, from the Adobe rant, the $10,000 rant earlier, how much I'll put into longer, medium, or shorter term. So that's where most of my Snowflake money is. And that's the one I wanted to shout out because I felt good about it. I also mentioned I was like, I could go to 210 this week. Looks like it wants to do that again. I'm going to circle back and see what the news is and let X finish up what he's saying. But this is a big move. Okay. Now we talked about when things in a short-term trade, like the day trades we took today, we had a couple bangers. We raised stops 50% above break even. Maybe something got stopped out. We talked about leaving a runner or two to participate in other stuff. So all that we discussed this morning, but I didn't expect Snowflake to move that fast off of a swing, and that's why we went over that rant earlier. Sorry to do this longer interruption, X, but
No, you're fine.
it's key because buying time doesn't mean you're not like oh, Banana's a swing trader. I really hate when you guys say that. Sorry, I'm a fucking everything. I'm a like this is my this is my profession. For those that don't know, I'm one of the few
Sorry to
people.
interrupt you real quick. I'm taking AMD 175s for the week.
Oh, nice, yeah.
Go ahead.
It's what is it over 168.50? I'm on another screen.
It is.
Yeah, that's a key pivot. So nice shout out there by X. And we always we step on each other's toes for trades or like a rant that relates to that trade. But he's really talking about some important stuff with the rotations and the diversification. And you hear me talking a lot about that stuff as well too. So I want him to continue that conversation. But something just like I feel like something's going on with hyperscalers and Snowflake. There's like a little pop here in the Nasdaq happened to Snowflake. So I'm gonna do some fishing for us in a few minutes there. But this is a key point, okay? We got into these contracts at $5, all right? And they're $8 now, all right? At 10, right? They're a banger. A banger on February 16th. It's January 23rd right now, almost a month out. And you can day trade it and swing it out. That's why I get upset and be like, oh, Banana's just like a swing trader. Like I'm not. How many we had a fucking day trade today that worked out. It just depends. Okay. I'm going to take a little bit of that, like exclusive. And I talked about a little bit of that lotto money out of 10 grand and look for these Adobes, these things that expire today or this week. Those things, yeah, we're using our best professionalism to try to capture alpha. But exclusive and I both know that's why it was such a good rant he did. Anything can happen in the short term. So the Federal Reserve guy could come out and say something in 10 minutes or this and that'll fuck up every 5 minute chart. A 5 minute chart's not a monthly chart or a weekly chart. Okay. It takes a long time to form those weekly, monthly charts. I always give the analogy. It's like think of it like a naval fleet, an aircraft carrier, a battleship. It takes a long time to turn the complete trajectory of those boats. But the boats in the back, they're fast. They can deliver goods to the aircraft carrier. They can go backwards. They can go forwards, like day-to-day stocks, like 1 minute, 5 minute charts, back and forth. Okay, but to turn the trajectory of a weekly, monthly chart, that's a bigger deal. All right. So just real quick here, back on Snowflake, those contracts are $8 now. All right, that's almost a banger. That's today's trade. We took it today. Yeah, I was in them, but I took them today. I added them today. So sometimes a swing trade Okay, if you buy enough time, they can surprise you. That's what I'm trying to articulate. I was trying to, like, how am I wanting to articulate this? It's better to have time. That's the fucking thing. Okay, yeah, we got the thing that worked out this week. Great, it's cheaper, but it's better to have time. And then what I think of is, then I'd rather be pleasantly surprised that it worked out into today's trade or this week's trade, and I don't have to worry about it till February. I'd rather have time and be pleasantly surprised and have what Exclusive was saying. Let's say a diversification, different sectors, different rotations, different themes, like he was saying. And I have 10 things, okay? And then I'm like, all right, well, this theme is in favor right now. I have like a pipeline, right? Okay, so this theme's in favor. This one, this option, I don't have to wait a month. It's pleasantly surprising me now. It's a day trade. Now it's this week's trade. Now I can take profits and go to the next one. Well, now next week that theme. So now I look good on that day, and that's what used to happen to me on Spade. Like, how does Banana keep having a banger every day? It's because I set one up a week ago. I fished one out today. The Snowflake one I was already in a couple days ago at 198. I saw some turns there. The Adobe thing we fished out today. There's a pipeline. If you're full porting your 5 grand analogy we did earlier in the spaces into ODTE and this week's thing, we went over what the detrimental effect that could be to you. Sorry, I totally stepped on your fucking toes here, but the snowflake thing was such a key to what we were saying because this is the way X and I trade. That's why we love each other. Sometimes our long turns into today's trade, right? Like I didn't expect snowflake to do. I saw it starting to turn, but then it pleasantly surprised me. Yeah, should I grab 210 calls this week? Not when I already had other dates. I couldn't be irresponsible to our community when I'm like, okay, something has to be intermediate term, something has to be longer term, something has to be shorter term. That was the one, the longer term, but we got pleasantly surprised off the bat. And the last thing I'll say is when something that like that does happen, I kind of react to it a little bit like a day trade because like that you have to can't look a gift horse in the face. So 5 went to 8, the $5, that's $300 a con. Okay, let's treat it like it was a banger. Let's do 50% above break even. Okay. So no matter what, we capture 650 on those contracts, $150 a con. Or if it can hang in there, let us swing. Oh, it's like Exclusive said, man. This one's out to February. Can as long as it holds that 50% break even and goes up a little bit more, we can raise the stop a little bit more, choke it out. It wants to go up more, great. If it stops us out, even then some. So this can we have till February. If we manage it, give it a little breathing room, it can be a fucking crazy trade, or it could be no matter what a great trade, and it's already a good trade by just raising stops up and being pleasantly surprised and having time because we bought time in the beginning. That's it. Sorry, X. I totally fucked up your whole thing there, but it just
No,
happened
you're
so fast.
fine.
I thought it was key to everything we were saying.
Hey, you know what was no, I don't see any key news or rumors or anything,
Oh,
and I
thanks
could
for
just
doing that while I was doing that.
be missing it. What I do see is an alert off of a bounce back test of 198.83, which is a key fib, and it's a bull flag, the top of it back test. So
So just good
ideally,
technicals.
yeah, ideally 217.36 would be a longer term target for me.
Yeah. Oh, it's a
Um,
big ass cup and handle on the daily. I just see this.
yeah,
Daily MACD's just starting a bullish cross. It's at this neckline, which has like been resistance for it for quite some time. So that's why taking a little trim here or raising that stop doesn't hurt because there's been a lot of shenanigans at this level. To say that we're exactly at the spot that it's going to get through those shenanigans is being a little bit, you know, naive, but it could be. It's not, every time it knocks on the door, one of those times the door is going to open. But again, we got till February for the door to open. It feels like this time it might, because this is like the end of the cup and handle. I kind of seen this pattern a few times. I'll chart it out. It's got a double. It's got a what's called a double handle. That could be a big breakout. But I'll explain that in a different chart. Um, but it's interesting to say the least. I'm glad we got into that on this Spaces today on episode 4 because that can work out to a great swing, and it worked out to almost a banger just off the day. Um, to recap a couple trades, I know Exclusive got into AMD off of a good moment here. I see what he sees. Um, Amazon, we got 155 when it was down like 70, 60 cents in the money. That's great. So, and that's this week too. And listen, man, this has the potential to also be like a crazy trade. I'll tell you why. Because we went over it in the pre-market run up, right? We are well prepared in this community. All right, we do homework here. We don't fucking putz around. I'm a hard worker. I don't fuck around. Um, I'm a silly guy, I snowboard, but like I fucking work hard at this shit, and I make it show so that you're inspired. Like, you saw how I was working fucking all day, all night last night. Um, the Amazon thing, we got that pivot right, 157.15. That's a key level we're watching. That's on our notepad. And if it breaks above that, we talked about it going to 159, 160. So, you know, this thing's in the money right now. It's holding the option level, so I'm able to stay in that trade. If this thing fucking takes out 157 tomorrow or today, or it could be interesting. It could be a few hundred percenter. It has the potential, but it's already 20, 30%, so it's already profitable, which is good too. And a lot of people, man, there's nothing wrong. Our buddy Josh, not whale, really good friend of our spaces in the community. Great guys, great follow. Love the guy to death. He he's a great trader too, and he like does real well with like growing small accounts and just base hits. It's like that. Everybody has a style. There's nothing, like you got to find your own. I do my best to explain because I have multiple styles and wear different hats, and so does exclusive. But like, he probably would have already sold this thing and made his 20, 30%. And there's nothing wrong with that. And just keep repeating that. I've seen the guy grow a $5,000 account to a couple hundred grand. So, but that's that. And then Alibaba, it almost got to 75, right? It teased us. Got to 74.50. That's the way that goes. I've always thought we did a good job of talking about that in this spaces too, about like how it like will just stop you out or just come short of the target. Like these little like last mile of a 27-mile marathon and it stops short is like very indicative of the stock market. It's like a parlay. The stock market's like a three game parlay, and you always hit two games but miss the third. That's like the stock market. um, but yeah, so Alibaba we had $75 calls. We took them at 350 around there, and it went to 74.50, and those options went up almost to $5. So that was great. Um, it could still stay in there. Still hasn't stopped me out. Sometimes I say us or we. I'm referring to my little brother's an audience member. We have a big age gap, and he's a new trader, so he listens to a lot of our stuff. I like to. He's my little bro, so I can give him advice. So if I accidentally sound like I'm giving financial advice, I want to remind people that I'm not. With that said, um, X has gone over Google. Honeywell is perking up. So for those that know, I posted my charts and positions. I don't know why I'm losing my throat, but I'll just briefly, just quickly as I pull that up. So I'm long the February 23rd 205s, April 19th 210s, and June 21st 200s. That's a more expensive, deeper in the money contract with Pine. So it's just kind of like a delta. It's almost like owning 100 shares, smoothing out my delta there. Exclusive and I have talked about deltas a couple times. We'll talk about them in other spaces. But the closer you are to one on your delta, it just basically means that your option is acting as close to dollar for dollar to the underlying stock. So if you buy deeper in the money calls with time, they're obviously extremely expensive, but their deltas are very solid. And it's like I explained, the Greeks, it's one thing to know the math, but I learned more about the Greeks when I started thinking of them as like a Italian man. But you can think of it as any type of thing you want. But when you think of the Greeks as you know, it's telling you it's like I said, it's deeper in the money, and you have time. It's like, hey, I think there's a good chance of this happening, guy. You know, like I could see us getting to the place we need to get to here. So it has a better feel about it. So it's like it's going to give you more in your underlying premium as the stock moves. It's like, yeah, this one feels good. And then like, you know, when when you're dealing with a short term option and it goes against you, it's like a frantic, you know, Italian guy at the pizza parlor. It's like, oh, this is not looking so good. I don't know what to do here. You know, it's like a, you know, my pizza pies. So it's like there, you if you think of the Greek psychologically, it actually will really help you a lot because it's all about it's really the options feelings. That's what implied value. It's like, yo, bro, we're getting a little out of the money here, and there's not a lot of time left. I don't know, you know. That's what the option's trying to tell you. And then the snowflake, that swing is like, yo, I think we're looking good here for 210 by then, and you might have a little bit of extra. So it's like it's telling you a story, and the way you set yourself up is the way you're going to participate in that story. If the story is just like, you know, there's movies that like get off to a slow start, but then they become like some of the best movies of all time. Usual Suspects, you know, it like comes right to mind. You know, it's like one of the fucking greatest movies of all time, but you had to sit through a little bit of it. You know, and if you bought a short term option or have short term patience, right, you missed one of the best movies. You missed one of the best breakouts. Maybe this is a decent analogy I'm coming up with. But I like to think of it that way sometimes too. The Greeks in that thinking that, you know, they're uh, they're telling you a message through the story.
All right, so far AMD paid about 16.5%, and it's back down. The SPX is rejecting the key range, so the markets as a whole pulled back slightly. So again, always take profit when you have it. I'm going to be holding it for the week on the remaining contracts, but just so you're aware. Okay, so what was the last thing I mentioned? Um, what was the last thing I said about institutions? I know I went over diversification. I know I went over rebalancing, themes. Oh, analyst guidance and targets. Um, so, geez, there's so many. It's like a big web when you think of institutional level investing. There's so many webs, but so for analyst guidance, um, for their targets, the first thing I want to help people understand is every institution is different in how they interpret a price target. Um, because every target is going to identify a stock as equal, over, or under evaluation. And that that alone can cause institutions to reallocate and make a decision to do so. So keep that in mind, regarding specifically an analyst price target or their guidance that they give them. Um, Something else that you want to pay attention to is outside of just the standard earnings is the revisions that they make to earnings. What does that mean? This is for their forecasts, which this will typically, what's a good word for it? Precipitate a reassessment of their targets. And this can be a catalyst to an institution because if they see a revision to a forecast, which again, we see this with SMCI. So specifically, this is what happened with SMCI. This can be a catalyst to a major portfolio adjustment. And this is also what, in turn, leads to a um, a market reaction induced by an institution level rotation. So it's really important to understand revisions on a forecast that are above expectations or beyond the forward multiple on PE, PBS, PS, not PBS, PS ratios. So it's really important to jot that down when you're trying to understand these analyst price targets. Something else, sorry, one of my headphones died. I had to put the other one in. Something else, specifically with analysts, you want to pay attention to is how, on a macro level, they make their targets and outlooks based on um, sectors and sub-industry outlooks specifically. So, so their guidance is it's gonna pertain to an entire sector, right? Rather than giving something on an individual security, from an institutional perspective, they're going to look at the guidance on the sector and the overall sub-industry of that sector, not just, Netflix or not just Roku or not just Disney. They're going to take the collective, all the high level market cap names within the sector and the sub-industries, and they're going to see what are the analysts all saying as a whole, what's their guidance on the sector, what are they pricing their targets based on, what earnings revisions that, again, when there's a theme and you see that rebalancing into that diversified asset like AI or semiconductors or chips or processors or whatever the theme is for that rotation. Right now, we're seeing a theme into something very specific. A few weeks ago, it was healthcare. Now it's currently semiconductors. So when we see that shift, which I'm assuming that it next up is going to be, something along the lines of communications or streaming services, thanks to this deal with Netflix. So these are the types of moves that you want to see based on an analyst outlook for an overall sector, which can be interpreted by an institution to cause a reaction for them to rebalance a specific allocation on that specific asset. So I know I'm saying a lot here, but it's recorded so you can listen to it. And I might be kind of going back and forth between things I'm talking about. Again, this is off the top of the head, so I'm all over the place, but it's all connected because one can't happen without the other. And this,
Mm-hmm.
think of it as a domino effect. It's a
Exactly.
catalyst, it's a chain reaction. One doesn't happen without the other happening. Um, so, which leads me to my next point. If the outlook lines up with the revisions and that lines up with the interpretation and it lines up with the theme and it lines up with the asset class that causes the rebalancing, the sector rotates and we see inflows instead of outflows. This is where the laggard becomes the opportunity becomes the performer, then we take profits. And then the theme starts over. The cycles is perpetual. It starts, money goes in, money comes out, money goes in, money comes out. But
Yeah, well said.
you can kind of forecast these moves because you understand why specific analysts, and I'm not saying every analyst is smart because there's a bunch of them that have no idea what they're doing, but it's really important to understand those key points. So I wanted to lay it out so you guys can re-listen to it later and take notes.
Yeah, no,
So
that's KX, real key.
So thank you. So where that ties into this next portion is, how does their price target contribute to risk assessment? And again, we're not talking about individual investors. We're not talking about retail. We're talking about institution. Institutions manage risk 100 times better than a retail trader in more than one way, not just buying and selling, covering, diversification, rebalancing, etc. If we understand why the guidance and price targets based on the interpretation, based on the revisions, based on the sector outlook, we can understand why institutions adjust their portfolios to maintain an acceptable risk profile. because people are paying an institution to manage their money. They can't give a report to their investors and say, we did this, but we don't know why. We just like the way it looked. We wanted to be like Kramer and say, I like the stock, and it go down 20%. Institutions have to have an explanation to their investors. You cannot trade blind at an institution level. You can't buy 20 options and hope one of them sticks to the dartboard and throw 20 darts. You have to have a reason, you have to have a cause and effect, and it has to be explainable to your investors. So understanding how an institution is going to mitigate their risk or manage the risk that they have exposed in that sector based on that guidance, understanding why the target is the way it is in the theme during the rebalancing in that asset class. Now we have an understanding why, because it's all about risk. And another point to all these things, and it's kind of like a snowball effect. I'm just going down the list of what I know. We understand why the guidance and price targets that they give can relate to the rotation and rebalancing from an institutional level, but we need to also understand the uh, the mechanics behind what's driving the car to that asset vehicle. Why is the institution willing to rotate based on that guidance and price target that their analysts that they're paying to present to their investors? Why are they willing to rotate to this? I'll tell you why. From a fundamental perspective, and we went over this on the last base, the and this is all perception. I mean, it's every institution's different. Every institution has different performance. They have different, styles, different asset classes. So again, to each their own. Everyone's different. But in my opinion, back to the thing we were talking about, earnings revisions, what's over or under evaluation, what's trading at their evaluation, what has room for future growth. Keywords we're talking about like AMD, Nvidia, SMCI, with the theme of AI and chips and semiconductors as a whole, we see that rotation into these names because of the opportunity it presents. It doesn't matter how much money's in it. More money is going to come into it now that the end of the year has already occurred, the rebalancing has occurred, the losses for tax harvesting have occurred. It doesn't matter if the stock is trading at a specific price. If there is room for the math to grow at an evaluation standpoint, the stock is going to go up. It doesn't matter what article comes out. It doesn't matter which is why you see the rotation in season and seasonality. It lines up, right? What goes up comes down, then goes back up. Why do you think the market's back up to an all-time high? It's because the rotation has already occurred, and now the theme is based on the valuation or the perception of the market influence and timing of these rotations. Okay, so we have to understand that mechanic. We also have to understand, and we talked about this, I think on episode 2, maybe episode 1, I spoke to the economic indicators, the things that have been all the talk in 2023 and at the end of 2022, when everyone was fearful of recession, everyone was fearful of inflation, everyone was fearful. Fear mongering is one of the biggest things that move the market, right? When you understand the economic indicators, whether it's the overall health with GDP growth, whether it's the inflation rates, whether it's employment statistics, and you can go to investing.com and get the economic calendar for the week and have specific moments in time where you can be prepared for the data, which is why we're always talking about what data is coming out on this during the space. And today there wasn't any data, which is good, other than what was it, PMI or whatever it was. When there's less
Nothing
data,
today, PMI tomorrow.
PMI tomorrow. When there's no data to influence major decisions, the day before and the day of, guess what? The markets have been flat. SPX, the composite, the Dow are all almost flat. And the Dow hit 38,000 for the first time yesterday, but the markets overall were flat. That tells you that you need to pay attention to what's happening rotationally, because the Dow is performing, why is everything else flat? This is where the economic indicators as a whole can help you kind of identify what's happening in rotation because of the perception of the market. Is it trading at the value, or is it trading below the value? Do the market makers want to make it break, or do they want it to retrace? And all these things tie in together to the sectors, to the revisions, to the interpretations, to the rebalancing, to the diversification. I know I'm throwing a lot of words to keep track of, but again, this is recorded so you can go back and listen. But those economic indicators are the key to understanding why the market is doing what it's doing. The market doesn't move as a whole because we're talking about trillions of dollars here. We're not talking about millions or billions. The market doesn't just move overall for no reason. No one, no one person can influence, during market hours at least, when it's, more related to dark pool, no one can influence the market as a whole. No one has that kind of power or should ever have that kind of power. But we can see when key economic indicators start to point to a downward term or an upward spiral. So when you see moves like today and yesterday, when the market's somewhat flat, in my opinion, this is just my opinion, it's flat. This is where people get chopped up because they're trading without understanding why they're trading. They're getting into a trade that can expire, which is what options are. They're a prediction based on, hopefully, based on due diligence, and you have a time where it expires. It is a right to purchase shares within a predetermined amount of time, and you make more money when you're more correct at an earlier time than the expiration. That's it. That's all it is. But when we can understand the curve of the economy based on the GDP, what they're talking about inflation wise, the statistics, the you know overall Fed balance, these are the things that they talk about all day, every day, that you can use to make a prediction based on education. You can make an educated guess and take a trade potentially based on an educated guess, not just blindly throwing it into 20 positions and hoping one sticks. That's not trading, that's gambling. So if you add all these things to your list, you'll have a better sense of how the market moves as a whole. And then you can go into everything else before this, go into the sectors, go into the sub industries, because no one stock in general moves an entire sector. It's the sub industry as a whole, it's the market as a whole that's moving, not just one ticker. Um, and to just kind of piggyback off of the last point of using those economic indicators, you can look at what the banks are doing because, what were we just talking about? The stock market is money. What is money? Money is math. If we know what the banks have to do based on monetary policy, and this is one of the things that the news love to talk about geopolitically, this is not just in the US, this is not just in Europe, this is not just in Asia. Monetary policy is global. Central bank actions, this is interest rate changes, this is quantitative easing, this is asset allocation strategies based on monetary policy. Do you really think that institutions are blindly taking trades just because of the revisions or just because of the guidance or just because of a price target? It's all based around what they're allowed to do based on what they're lending for. And if the monetary policy that's being driven, the attention's being driven to, that's going to affect the asset allocation at an institutional level. And this leads me to my next point, and I guess this could be one of my final points. Liquidity. The liquidity of the asset is going to determine the portfolio's flexibility. And again, this is at an institutional level. We're talking about millions and billions here. We're not talking about $10,000. The liquidity of these assets is going to determine the institutional level portfolios flexibility, and ability to execute those rotations. You can't execute a trade if there is no liquidity. If the asset has no liquidity, you can't enter and exit at will. And this is why we're talking about these things at an institutional level, and that I want to keep reiterating that point because this is not in general. If you understand everything that I'm sorry, I'm going on a rant here, but if you understand every single thing, you have to understand what's under the hood, you have to have a license to drive the car, and you have to have a destination. And everything that I've just gone over, everything is connected. One doesn't happen without the other. And then the last and final point is time. The investment goal based on the ability to enter and exit positions, based on what's happening with monetary policy, based on what's happening in the economy, based on the targets, based on the guidance, and etc. You get my drift. Every single domino cannot be hit until the first one comes, and that is the time and liquidity. Because do you really think an institution is going to buy something if it's only going to be for a day? Do you really think they're going to buy something if it's going to be for a week? Long-term investments are primarily what the institution level money is aiming at, which is why you see something go up and down and break a previous point. This is where Wyckoff distribution and accumulation comes into play. But the accumulation and distribution is key to institution level investments because it allows them to build their portfolio, take profit, build their portfolio, and take profit. But not one can happen without the other. So if you understand the time of the guidance and the price target, which is why every analyst price target and their guidance has a timestamp. We see Nvidia going to 1,000 by 2026 or whatever. Kathy Woods, even we see Tesla going to 10,000 by whatever she said. Everyone puts a timestamp because they understand that the investments are based on time. And if you understand that and every other point that I made before this, you will be able to identify sector rotation. And rent, sorry.
No, that was good stuff. It tied into everything we were talking about, and I like it because I think it was the last spaces, or maybe you're right, it was episode 2, where I went off on a rant and talked about inner rotation because we were just dealing with it in the start of the year, right? We basically, um, this is what happened, right? They said, okay, everything that was great last year, the Magnificent Seven, they're gonna fucking suck this year. Pardon my French. So go somewhere else. So people did. So they went to the small caps because interest rates, just like Exclusive laid out, which was a great layout. The monetary policy shifted. That allowed for interest rates to come back in. Some algo kicked in a discounted cash flow model that allowed it to like start beefing up like the things that aren't profitable or whatever. And the small caps got a rotation. But then, like I've tried to explain, and I think it was in that spaces, the stock market's job is to make everyone think there won't be a small cap rally after there just was one, in order for there to actually be one again. So that's what X was talking about. So there were like these just massive rotations back and forth. And I think we did a good job in that episode, in the other episode, and talked about that inner rotation. And I was telling people, look, when it's very difficult to be perfectly like situated for rotation. Sometimes I'm lucky, I'm in healthcare before they go there, materials. But it's like Wayne Gretzky said, you got to be at the place before the puck gets there, right? So what I try to do is I'm not always great at that. So what I end up doing is I go counterclockwise. And if they start selling big cap tech, I start picking up the pieces. Then what happens? Boom. Nvidia goes from 500 to 600, and then they start selling off the small caps again, right? IWM was at 202, 205, back down to 197, 195. And I started picking up those pieces. So I can work within the institutions, like Exclusive was saying, but find my own groove, because it's very difficult to be an institution and to right to compare and to play that same game. So I go offbeat like a drummer, right? They're going on 2 and 4, then I'm going on 1 and 3. They're going on 1 and 3, then I'm going on 2 and 4. I hope between both of us that helps, and we got some obviously some active trades. The markets come back in a little bit. Adobe's holding in good too there. So that trade we had to go 100% on Adobe. It hasn't stopped me out yet because we all trade different with our stops and our risk, but I'm still holding above break even there, so I'm still in that one. Amazon is close to break even, so the market caught a little bit of a funk here at the end. There are some things to keep track of on the risk thing, and then I want to bring up we have a my brother from another mother, a good guest. Just wanted to bring up, again, the exclusive and banana spaces is kind of that. It's just us, and we have a lot of people that like want to ask to come up or be a part of it. And for the most part, we kind of, it's not that we turn it down. It's just like, we don't want to get a lot of chefs in the kitchen. But my friend Jake, who's when I say a brother from another mother, um, I think he almost loves charting as much as I do. It's slightly debatable, but I would say probably in the 90th percentile. I'm sure he's cracking up in the background. But Jakey, come on up and just say hi to us. If you don't know Jake, Jake's one of the best technicians out there on FinTwit. Him and I have become good friends over the year. We've done some awesome work and interviews with some great people out there, and wanted him to just stop by and say hi and just see what he's thinking and seeing out there. What's up, Jake?
Hey, what's up? Thanks for having me on. It's been a while
How's
since
it
I've been
going,
on one of
buddy?
these.
I have to talk to you immediately in a jealous format because you guys are already having good snow in Colorado, and we're having such a lackadaisical winter here in Tahoe after we had like the best snowfall in 2 decades last year. I'm spoiled. I think I'm gonna come and move in next door to you.
Yeah, no, it's funny. I was in Tahoe last year for when the storms really kicked off, and it was quite a bit of snow. I was up in Steamboat last week, and um, to be honest, we haven't gotten that much snow in Colorado either. It's just
You haven't?
no,
It's that kind of a
Steamboat had a
year.
good run, the last week, but for the most part, I mean, I'm pretty sure we're definitely below where we should be. So I'm a very picky rider at this point. So I only really go up if it's snowing, because the traffic can just be brutal on 70. So I don't think
Yeah.
you're missing out as much as you think.
Okay, all right. Then I feel
So,
better. But I know the feeling. I'm lucky because I live next door to a ski resort. So it's like sometimes at the end of trading, I just like go hop on the gondola and just do like a run or two. But yeah, I'm more like you where I really like to hit kind of the back country. I like a good snowfall so I can get in some of the thick of it, we'll call it.
yeah, no, it was a good time to go last week, and I've never been to Steamboat, so it's never. And my buddy wasn't really familiar either, so it's like you go to a new mountain and you really don't know where you're going, and when you have a ton of snow, it gets a little sketchy when you start getting up in the hiking parts of the mountain. But yeah,
Exactly.
either way, I appreciate you guys having me on, and just wanted to pop in and maybe make a couple comments. I do remember, I think last time we talked, we were talking about MU, and MU is just absolutely ripped. So that's always fun to see kind of before and afters of just basic technical stuff. I know you and I are both MACD guys. So yeah, it's we're at a pretty interesting spot here. I mean, one of the things that I've seen actually quite a bit on FinTwit recently is like when you're at all-time highs for a lot of these names, the broad markets, Nvidia, AMD, how do you even look at resistance? What is resistance? You have pretty much nothing to the left side of the chart.
Right.
Um,
Blue skies.
so what do you reference? And it's been pretty amazing. The 1.618 extensions have been pretty incredible recently. Just acting as not only upside targets but also the short-term resistance. And something that concerns, I don't want to say concerns me because it's a market of stocks, right? It's not it You have the stock market, but at the end of the day, just because the stock market's down doesn't mean every individual name will be down, and you have rotation, as you guys touched on. But something that has me a little at least hesitant going into kind of the heart of earnings season here is, it seems like the market's kind of front ran a decent amount of what some of these tech names could have, had on the upside, if they reported, and some of these names weren't up 20, 30% already on the year.
Right.
So I'm kind of in the camp of, I think we're going to see some pretty big rotation. Anytime you have really any sector front running earnings season, it's not a bad thing. The market really fires on all cylinders when things rotate. It's been interesting to see oil starting to catch a little bit of a bid here,
Mhm.
and some of those names are definitely kind of have been sold off pretty hard over the last couple months. So yeah, I'm definitely keeping an eye on oil, and the dollars definitely has some strength here recently. So um, yeah, I'm a little hesitant here. I think I heard you talking about you had some Baba calls. Um, that was a name that kind of threw me for a loop for a couple weeks, but I was able to take quite a bit of profit today. I had
Nice.
some.
I usually, you missed the part where I said I suck at it. I'm like the worst Baba trader I think on the planet Earth. But just to your point there, just to dovetail a couple and some connective tissue to some stuff Exclusive and I were saying before you hopped on. Um, yeah, I think we're feeling and seeing a lot of the same stuff, which is good always when a couple of colleagues and pros can fill in each other gaps and then see eye to eye on some of the stuff too. And that's the following, which is um, funny enough. I did it in a snowboarding video. I based not a snowboarding. I was playing around with the Go Live with the video live feature on X Twitter,
I saw
and
that.
I was on a run. And I was finishing up a run, so I had like a long gondola ride down, and I was like, well, this is a good time for me to just like go through my weekly forecast and a lot of thoughts on the market, and I don't have to like it'll save me a bunch of typing. So in that forecast in the snowboarding one over the weekend, I talked about what you're talking about, and I laid it out kind of like this, Jakey, where I was like, a lot of these stocks have run, and I was like this is kind of like the start of the year and like leading into this stuff, and I was like, with earnings reports coming up and the PPI, the CPI kind of threw everybody off, but the PPI, which is more leading, got inflation kind of back on track, which was like to the downside. So I was like, professionals, they know, to your point, Jakey, that the big cap tech stocks are going to have good earnings. Like the professionals know like the trajectory. Like this one's coming back into digital advertising. Trends. This one's inflecting back into profitability. This one's that. That one's this. And they know that the inflation's coming down and that the interest rates are set to more or less come down. So they do what Jake started saying. They started front running a lot of that stuff before the earnings. And in that forecast video, I said, so we could expect maybe some of these things to bid up, but then to your point, as we start to approach earnings season, the catalyst starts to end, right? And we all know the mantra of the pros out there. Sell the news starts to kind of like make its way, and especially to Jake's point, and I actually think you guys should write this down, because when you have three professionals between what Exclusive said and then what Jake said and me saying it, maybe it's a good point. It's all about the positioning, right? And I think that's a key point too, right, Jake? Because if we were like going down 10-20% or 10-20 bucks into these names going into earnings, that might pique our interest for some pop out of that for the positioning. And inversely, when you're up so much going into them, you have to be careful of the catalyst, because now the catalyst has been removed. You've maybe front run it, like Jake said, and now you gotta watch out, because now they're gonna maybe use those things as big ATM machines, as sources of funds. And like Exclusive was saying earlier, and Jake just said now, use that, sell the news, use that, we've made money, now let's take this money and put it somewhere else. So we're not the ones losing money in this sector, we go somewhere else, starts to kind of play fruit. So to all your points, Jakey.
Yeah, no, 100%. And I know Tesla's earnings are after hours tomorrow, right? Or today?
Yeah, well, Netflix today.
Netflix today, yeah. Yeah, and interestingly enough, if you go back and look at Netflix is a pretty good kind of indicator of sometimes how are going to go. Netflix has some of the biggest volatility after their earnings that I've seen on any of these big caps. I mean, what last earnings in October was like a 17% upside move when interest rates were going up. You saw Netflix drop 20% in a day from earnings. So it will be really interesting. I mean, from a technical perspective, Netflix looks really good. It's been range bound. it hasn't really front run, earnings like AMD or Nvidia have. It's been pretty range bound for a while. It's kind of holding on to, a decent volume shelf here. So, if I were to take a wild guess on Netflix, I mean, the problem is the technical setup can be completely invalidated when you have an earnings kind of binary type of event. But if the market really is strong here, and you do have some rotation, I mean, some of these names like Disney, Netflix are starting to look pretty good. And Disney's finally kind of bottoming out. It was a little early in August and September because you still had kind of that last stage of selling pressure. But with this new high that we've had, at least a local high, Disney, Netflix, that may be definitely where some rotation comes in. Interestingly enough, I don't think a lot of people think about this, and they should. If oil is going to go up, which it looks like it's ready to make a move to the upside, you have to think, all right, well, oil going up, gas prices going up, you actually subtly start seeing people looking at EV stuff again. Because when oil, and that's arguably, I mean, Tesla has definitely brought down the entire sector at this point. But if you look at oil, when oil's tanking, what what incentive do you have to go get an electric vehicle if gas is back down to 250 a gallon? At least in Denver it is for just regular. So, if we do have an upside move in oil, you actually may see EV names, especially if Tesla can get their shit together tomorrow. There's another thing, right? Tesla's down 20%, over 20% from the highs to the low from yesterday on the year. How much bad news is priced in? So if we do have like some type of at least decent move up in Tesla, I think you're going to see EV names start catching a bid again. Oil, especially if oil starts going up, you're going to see EV names, I think, benefit from that. I mean, look at EV
Yeah,
names, what they did.
not to cut you off, Jakey, but to your point, I'm looking for, and this was a key post and topic before you hopped on with us for a second, was I'm looking for, right, and this is both inversely both ways. Good news, bad price action, right? Bad news, good price action. And
Yep.
Tesla's riddled with bad news. And if it's just like says anything good, or even it just like whatever, and it's good action, I think to Jake's point, it's going to start to tell you a local bottom's in.
Yeah, and I mean, from a technical standpoint, I use pretty simple approach. I like to use the RSI and the Williams percent range just to get an idea of when momentum's switching, and
Mm-hmm. I like those too.
um, and you're just at a really interesting spot for Tesla. You're pretty much holding right at the January 23 bottom, the volume weighted average price, that zone from that bottom. We're trading right at it. Williams percent range and the RSI are both signaling that things are extremely oversold here. And I
Mm-hmm.
mean, for Tesla to be down 20%, pretty much almost on a daily basis, just red, red, red.
And it's got multiple inverse head and shoulders, like on the daily and weekly time frame.
Yeah, and I personally am not going to play Tesla because I just don't play anything in earnings. It's just not, it's for me. It's more of just a little bit of a gamble, and sometimes I don't mind taking a little bit of a gamble. But it's been a good week, so I'm probably just going to kind of sit on the sidelines and play whatever moves after that is kind of that air is cleared. But
Right.
yeah, Tesla I think is going to be a big status quo changer if we can finally catch a bid at this VWAP zone from the January 23 lows. We could definitely have a sustained at least short term, I'd say 2 to 4 week rally in not only Tesla but also just names in general that have gotten beat down. um, there's a lot of these EV names that just have gotten killed. But to my point, if you look at what oil did during the summer and you look at what EV did, there's definitely a correlation between high oil prices and electric vehicle in general interest in that sector. So if we do get some type of pop, it could just simply be a technical pop on oil, but that's kind of what I'm keeping my eye on right now. I'm not someone who's gonna try to short Nvidia, with this kind of strength, but I do think it is a little overextended, and you could definitely maybe see a little bit of a pullback in that name as money just naturally rotates into things that aren't overextended. And, there's a lot of growth names that have gotten killed recently that going into earnings actually look like a lot of bad news has been priced in. And if you can finally get the 10-year kind of under control again and trending down, I think there's definitely some opportunity in that space. So just wanted to come on. I definitely don't want to take up your whole show, but just wanted to pop in and say hello. And I haven't talked to you in a while, so it's
No, I'm
always good
glad.
to
I'm
catch
glad
up.
you did. That was kind of the thing, and we've been branding this particular space as kind of this like like little um little mini partnership, because Jake, you and I have had a couple where it's just like you and me and Brian and Mark. And when you do spaces of like 10, 12, 15 people, it can you can get a little lost in the weeds, and it's you don't want to step on people's feet, and it's like shout outs and also just a lot going on, right? But
Yep.
what we wanted to try to do here is like people kind of, like know the way Exclusive and I think. You and I are very similar technically, as you mentioned. Exclusive and I trade very similarly. And then each person has a weakness that fills in a gap. We're not trying to do this thing where like it's like, we're gonna have 10 speakers come through here and like rotate and all that stuff. But I hadn't talked to you in a while a little bit too. And I'm glad you stopped by to say hi, because we look at things very similarly, but then we might fill in each other's gaps. So that's always good to have. And then I highly respect you just as a technician and a friend. Like we've always gotten along, and we see things eye to eye. And you have a really good approach to the market. And for those that don't know, I mean, Jake's a professional technician. He's a CMT, and I was going to be one, but that's a story for another day. But I'm just glad that we're able to share a lot of technical views, chop it up, have some fun, be friends, and it's been nice to have that friendship and support from you. I appreciate it.
Yeah, man. Thank you so much. And I'm always open for a space. I know Mark wanted to do another one, and actually have dinner with Brian tomorrow, so maybe I'll just float the idea to
Yeah,
them and see if there's something we could do. And I think 4 to 5 speakers is probably max you want to have on any space.
yeah,
But I think the last one went well, and there's a lot of interest, so maybe we can maybe do another one of
yeah.
those
The
in the
last
next
one
month or
was
so.
absolute fire. I mean, the feedback we got from that. Even I talked to Mark. Mark's like, I've gotten more feedback from that than when I'm on Bloomberg or CNBC sometimes. So it's because you know why? Because you touch like it's like jazz, country, rock, rap. We have it all. It's like you get to touch it all. We're like on one of those networks. You're only touching like a certain group of people. So I totally agree with you. Yeah, put the idea across the table and tell Brian that I say hello. Miss him as well too. So that would be fun to do.
Cool, will do. You guys have a good one. Thanks for having me on, and we'll talk to you soon.
All right,
Yeah,
Jakey.
man.
Thanks for
Thanks for coming
stopping
by,
by.
man. Good to talk.
See you guys. Thanks again.
Later.
Later. Cool. It's nice to have Jakey. Well, that was actually perfect because um, I actually need us to be on time today because I gotta
Right. I
go
was just looking
go
at the
go
clock.
do a
Oh,
doctor's
12
appointment.
perfectly.
Usually we go hour or two over. Sorry, guys. Today we'll be just on the time. It's 9 o'clock to the dot, and we're gonna end the spaces basically right here. But we were able to start a little bit early, and like we've been nonstop. So sometimes like there's a lot of dead space and we're talking about some other stuff, but we actually carved up some good trades. We dealt with the market going up and down. We able to carve out some money. Exclusive had some good trades. Then some things turned against us. We were able to have stops above it and take out some profits, or we sized for zero. But basically everything we did main today did pretty well. We had our Adobes, we had Amazon going the money. It's a market, so it goes up and down. You got to take profits here and there. But the things like Snowflake, like look at the way that's holding in. All right, and then we got time, and we talked about having time for certain trades and why we have short term or why we have long term, and we were able to do on that particular trade have time and have the ability to participate it, because I don't think that's going to stop us out or do anything bad, even if the market turn. I mean, it's strong. Anything can happen, but it's strong, and I'm pretty confident about that strike and date. So anyone can recap. I think Exclusive really dropped a lot of gems. I mean, he really did a good rant on rotation where it perfectly dovetailed into what Jakey came in and said it. He didn't even know that, so it was just perfect, perfect, perfect the way it worked out. So, Exclusive, bro, thank you so much. I mean, We really covered a lot of stuff, but the announcement that we made today was based off of the community and the feedback that we got from everyone, and we were excited to make that announcement, and we're looking forward to doing more shows. Now it's like it's going to be a serious thing for us, and I told you about the cadence and the dance steps. We're going to treat it like a show, like a Netflix thing. This is season 1. We're going to do 8 episodes, and we're going to have a second season and a hiatus, and it's going to be something to look forward to. And we're doing our best to bring you guys a lot of information. We don't just sit here and just like talk out our ass. We spend a lot of time, a lot of homework. Exclusive and I talk about what we're going to discuss with you guys. So we really try to do our best for you. I hope it shows. We really love you guys. I think we covered a lot today. I think we've like timelined it all well, like because it's been leading up to today. Like look at what happened last spaces, and then what happened after last spaces. Like basically everything we talked about happened. It doesn't always work out like that. We're not like crystal ballers over here. We're just doing our best, and sometimes it's working out that way, and one of these days it's not. Okay, so please be careful out there, and that's for any space. You're like, oh, this guy's on fire, I'm gonna go all in on that. We discussed that. We talked about the $5,000 Robinhood account. We talked about $10,000 as round numbers. We talked about different short term, medium term. We talked about rotations. We covered a lot of stuff today, and we had good trades. I'm happy about that. How about you, X?
Yeah, I mean, it's I don't want to be an echo chamber, but basically ditto to everything you just said. And we greatly appreciate the community, the support, and I know not everyone's still in the space from earlier, but when you guys listen back, there's a lot of information, and it can be a little bit overwhelming. So take your time with it.
Yeah, good
You
point.
can re-listen to it at any point. Like I said earlier, for those who weren't on the space earlier, at the end of episode 8 or the end of the season, quote unquote, I'll put everything together as far as the URLs to the spaces so that you guys have all the recordings in one place, and it'll be easy, and you guys can just listen to it like an audiobook.
Sick.
So not everyone will like it, and that's okay. And there's plenty of stuff to kind of touch up on, even if it's stuff you already know. Like this is all stuff we know, but we're going to talk about it and re-up on the knowledge because, what good is knowledge if you don't use it and you don't share it? So, that said, it's really, I want to talk about one quick thing too. And Banana, if you have to
Yeah.
go, you can go, no
No,
problem.
no, no.
I want to talk a little bit about the compounding thing that we were mentioning earlier. And, you know, I'm big on compounding gains, but I'm big on understanding how and why it works in a realistic manner. You can't go in with a perception that you can make 5% every day, and then by the end of the year, blah, blah, blah. If you made 5% every day on your account, you would be a billionaire within a year
Mm-hmm.
because you would be if you would be all these unrealistic, gurus or whatever they're called. You're basing these numbers on 100% reinvestment. If you had a $10,000 account and you built it, we're talking about business days, not 365 days. So you're talking about 240 days, or not even. Let's just say starting from today to the end of the day, that'd be 5%, 10,000. You'd be roughly at $3.5 billion
Yeah.
at the end of the year if you made 5% every day.
That
That
goes
doesn't
to our joke we made earlier about like how many billionaires there are actually in the country and how many billionaires are on FinTwit that get 1,000% a week every week.
right, and it needs to be brought to a realistic goal that you can set for yourself. You can aim for 5% of the previous day if you made profit. And what I mean by that is within a year, if you start with 10 grand, a realistic goal is making money while withdrawing money. In other words, if you make a 5% return, then you take out a specific amount of cash. So if you do it on a monthly basis, if you make 5%, you'll be at the end of the month you'll be up about on your portfolio. You'll only be up $176 if you're doing it right. If you're compounding the correct way, you'll take money out, and your portfolio will be up $176, but you'll withdraw 3,300. So you'll earn money and you'll grow your account by month 2. you should be up about $700. Month 3, you'll be up about 1,300. Month 4, 1,900. By the next year, you should be up about 100%. That is a realistic and extremely good performance and
with
goal
all those withdrawals.
with withdrawals. Now your account's up 100% after a year, but you've withdrawn 175 grand over time just by reinvesting 5%. So you make a 5% gain, you reinvest 5%. You make a 5% gain, you reinvest 5%. Not this, you YOLO 100% of your account and build 5% every day. That number doesn't make sense. One trade will blow your account. You're making 5% with the profit after withdrawing. And that's how you get these monthly returns that are consistent and realistic. But setting that unrealistic expectation is what prompts gambling mentalities. So, you know, the first week, I would say, if you're up $100, you're doing good. Or you're doing well, sorry. By week 2, if you're up $220, you're doing good. That means you're on track because it doesn't happen overnight. By the summer, you'll be up about $2,600, which is a 26% return. That's amazing. That's better than you're in the 90th percentile of hedge funds. How many hedge funds last year did more than 10%?
Right.
The list is really short, and we're talking about the biggest hedge funds on the planet. So if your benchmark is beyond 10%, you're competing with the best in the world. So just, bring that realistic expectation down because I've seen a lot of posts about, oh, make 5% a day. And, no one's, if you were a billionaire, we wouldn't be here. So it's, you know, I just wanted to set that expectation before we got off the space because I saw a few posts about that and it was like a trend I'm noticing about around compounding. So I just wanted to address that real quick.
The beautiful, beautiful magic of compounding. Oh, we talked about that earlier too, where setting those expectations on having short-term, medium-term, and long-term trades. If like you said, if you're putting 100% of your port on that short-term trade, because you're not only trying to get five, you're trying to get 150, 200, 300% full porting it, you're going to go full broke. And that's why I made the comment of you can get rich semi quick. Getting rich super quick is getting super broke. But you can get, it's like that compounding thing that X talks about. We made that analogy earlier. It's an avalanche. It doesn't the avalanche doesn't start as a full avalanche and it's the same size. It starts as a little bit as a snowball, and it picks up pace and it gets bigger along the way. That's how I grow an account, and that's how accounts grow. And once you start to get into that, we talked about the pipeline, having pipeline of trades and stuff like that, a longer term and medium term. But once you start to get into that process, we'll call it, that compounding really starts to kick in, guys. It's so hard, from what Exclusive was saying, it's so hard in the beginning to have that patience because you'll want to get rich quick. But you can get rich quick if you're patient in the beginning, because that avalanche comes later, right? But if you just like keep trying to get that avalanche in the beginning, you just keep fucking up your own snowballs and got to start all over. And I've done it a thousand times. Like, trust me. And I do it in individual tickers all the time because I have a lot of positions, and I'm like, fucking not good discipline on this one. Well, at least the majority of them, I got good discipline, but like, here's where I fucked up and here's where I got to be better. I'm still doing that till this day, 2 decades later. So it's always a learning process. Like, the cool thing about this game is like, it's infinite, you know, right? X, there's like always something to learn here. Like I learn stuff from you all the time. I like to think people learn something from me sometimes, and it's cool like that. But I think if there was one piece to like, so that you can like grab everything Exclusive said, grab everything I said, and grab some of what Jakey said, you know, it's it's really having patience and time. Like Exclusive say, he one of his like final points, which was like the key, like is time. Like I always bring that up because people always talk about price. Even in technical analysis, people over focus on price. Like time in real technical, like if you know like all the greats like WD Gann and Fibonacci, like time is just as important as price in a lot of studies. And if you give yourself time, you can get that rich quick. You can get that thing. But time is key. And time can pick up pace later if you get it now. And there's different ways to do that. We talked about all that stuff today. So I'm real happy with the spaces today. I'm real happy with like the first couple episodes of this whole thing. Yeah, we've had like, I mean, fucking last week and the week before that, especially like the way some of these trades have worked out and stuff like that. It's not always going to be the
Right.
case. So yeah, I mean, it's been great. Um, but there'll be times where it won't be. So like, if we're great as a community and we're like ready for those moments, and like we're like preparing, and we're just not like, it's not just like, this isn't just like a nightclub to like come here and it's like, oh, what are they shouting out? you know we do some of that, but I like to think of us as a little bit more fine dining too, and a nice show. And then you got like a party with the DJ at the end. So we try to like go through the whole journey here. And I hope that you guys enjoy the journey as much as we like, explaining it or going through it with you guys too. So that's it for me. I don't know if that's it for you.
Yeah, we can cut it there. AMD is back in profit, by the way, for those who are asking about it. Google's still holding above entry. Tesla, I'm already risk free. I'm going to hold those through earnings. Those can go to zero or 1,000%. Who cares? It's risk free. We took profit, covered the contracts that are still open. And now that earnings that we can't control, now we can just wait. And if it goes to zero, it goes to zero. If it goes whatever profit, it goes whatever profit. The point is to de-risk, and now I don't even have to watch the trade. It just works when it works.
Yeah, we had a
But
lot of those from last week too. And just to recap on that, like that PayPal thing with Amazon, we were in the spaces. We took the trades. We completely de-risked as Exclusive said. Okay, and then we did 300%. So we took our principal out and then made a couple fold, and we just took one of the folds, one of the profit folds, and put that into Amazon, and then that doubled. And that's short-term trading, right? And it's like Exclusive was saying, you're trying to get to risk free. You're trying to de-risk. You're trying to get into a place like what we talked about. You get a bagger. We went through an exact math and example. You raise your stop 50% above break even. If you get stopped out, that's okay. We got money to go back into the position, but that's a way to treat it. And then you never know, you could get stopped short and it turns into 100 to 300%. And then we talked about how we take that down, what we do with that money too, right? Putting those placeholders, that whole rant I went through, setting up the way that you psychologically, like, oh, I got 2 shares, I want to have 5, I want to get 10, now I got 20. Well, now I got to do some homework. Oh shit, that's what you could do if you have 100 shares. You have a round lot, you can do covered calls, you can make income. I'm 40 shares in. I just got to get 60 more shares. I have a process now, like Exclusive explained and I explained, to do these things, to make some money. Where to put that money from short-term options, putting some of that into places like you keep hearing the same themes, to put it into a place that no one can take it ever from you. Yeah, Apple can go down a couple bucks, okay, but it's not going to expire worthless if you buy 2 3 shares. If you buy 100 shares, it goes down $5, okay, you're not going to go screaming crying, right? But if your option goes worthless, it will. So if you made a little bit of money, we talked about how to set yourself up, take a piece of that, okay, and put it somewhere where no one can take it away from you again. You got lucky, take some of that luck and put it back into a place where no one can expire worthless. You won. And then the other piece of the profits, like Exclusive laid out really well. Then we set up a new risk profile, a new setup, a new trade. Okay. And over time, if you do it that way, he just did a great rant on how your account grows, how you're taking income out, and how it's growing steadily but surely, $200, then $500, and you're withdrawing money along the way, a decent amount. Okay. Just based off of those percentage math. It's all math. We went through it today. So if you got a little bit lost in the weeds, replay it. Take a notepad out, write it down, Google it, look it up, look up some percentages, take out a calculator. It's like, oh, it starts to, maybe it won't make sense the first time, but the second and third time it will. Okay. We don't expect everybody to be on, we're not like professors here. We're not like professionals and knowing how to educate. Like you might be a teenager out there, you might be a new trader, you might be a veteran. We talk to everybody. Exclusive and I get people that run like portfolio managers and hedge funds and money managers. Like, you guys are really talented. We like hearing what you say and stuff like that. So there's all sorts of walks of life that are in the background over there, and we appreciate all of you. But to any of you, the veteran in the game or the smallest person, we all make that. You want to, like, you take money and, like, right, that's double down. That's the blackjack. That's it's human nature. Okay. But if you can break that human nature a little bit and use some of this decoding, like we talk, that's like some of the caption of our spaces, decoding the markets, and you decode it a little bit that way. You use this, and you're like, fuck these guys. I'm gonna do my 5,000 thing and try to get it to 200-300%. It works out one time, the next time it won't. But you can get that $1,000,000. You can get that 100 grand. You can grow an account from 10 grand to 50 G's and, like, change your life and make a down payment on a small house or car. But you gotta believe a little bit in the process. It's like, I don't want to go through. I want to fucking hear Mikey shout out or exclusive shout out, then just make 300%. Just keep doing it. It won't work out like that perfectly. It just won't. It just, you'll be the one person out of 1,000. And for the most part, it won't. Okay, but you can get to that spot. You can get that rate. If you just believe in the snowball effect a little bit, then you'll avalanche. And I think that's a good place to leave it off, X.
Yeah. All right, guys. We'll post the recording, and you guys can listen back later on at your convenience. We'll figure out the next one, and then we'll see you guys on the next space, and hopefully you learned something. Hopefully you enjoyed yourselves and had fun. If you do, just like it, retweet it, share it with people, because some people might have missed it. And if there's anyone that can use a little bit of education or just a different approach, share the link. Again, it's recorded so they can listen whenever.
Yeah, like, seriously, guys, just share the link, because, like, we're not doing this for money. Like, look at how much work we're doing to give back. So you can't, like, press a share, but, like, like, you're not having to do this much homework. You should start doing a ton of homework off of the stuff we're saying. But, like, we did a lot of work here. Make sure that a lot of other people get to, just participate in that. Like, we're doing this to give back, so you can do that too. You can do that in a mini way. You can do the exact same thing Banana Exclusive just did by giving back to other people. And the karma's great. Like, we were giving back. I had good karma last week. I feel like it worked out for me. I think that's the way the universe works. So if you can, like you said, just share and help other people, I think the karma comes back to you as well. And I think we'll end it there. I love you guys. Looking forward to the next spaces with my brother here, and we'll talk soon. And you'll see, I'm sure, posts from me and Exclusive along the way.
All right, guys, take care, trade safe, and we'll see you on the next one.
Later.